Good afternoon, ladies and gentlemen. Welcome to today's meeting of the Audit and Scrutiny Committee. Apologies, we're a little late in getting started. As you may be aware, we've had some ICT issues in the chamber and the remote connection. Today's meeting, nevertheless, will be recorded, and a copy of the recording will, as usual, be made available on the Council's YouTube channel. But, however, it is not a hybrid meeting, as we cannot have participants online today. Please ensure your microphone is kept on mute when you're not speaking, and switch it on when you speak so that it's picked up for the recording. Myself and officers attending the meeting will monitor proceedings with a view to ensuring all requests to speak are seen. To introduce the officers attending the meeting today, we have quite a number. We have Louise Pringle, Director of Business Operations and Partnerships, Kirsty Stanners, Head of Finance and Chief Financial Officer, Mark Rogers, Head of Housing and Property, Leslie Bairden, Chief Financial Officer of the Integration Joint Board, Lee McLaughlin, Head of Adult Services, Communities and Wellbeing, also from the IJB, Paul Parsons, Corporate Finance Manager, Michelle Blair, Chief Auditor, Ian McLean, Senior Auditor, Debbie Hill, Chief Procurement Officer, Morag Brown, Strategic Services Senior Lead, Aidan Holligan, Strategic Services Assistant, Linda Hutchison, Clerk to the Committee, and Leslie Ann Burns. And we also have John Burke as well. Thank you. From the External Audit Team, I have Grace Scanlon. Moving on to the agenda formally, number one, apologies for absence. We have Councillor Nate Ireland, and I think also a statement regarding Councillor MacDonald.
Yes, Chair, will record Councillor MacDonald as present, given that he's tried to join the meeting. Thank you.
Okay, thank you, appreciate that. Item 2, declarations of interest. Members are required to give notice of any declarations of interest in respect of items of business on the agenda. Are there any such declarations? Okay, no, thank you. Item 3, Chairman's report. On this occasion, I would simply ask you to note that there are no matters to be brought to the committee's attention at this time. Item 4, unaudited annual accounts for 2025-26. We have Kirsty and Paul attended today. Who would like to kick off? Okay, Paul, thank you.
Thank you, Chair. The report presents the Council's unaudited annual accounts for 25-26, which have now been submitted to our external auditors. The committee is asked to note and scrutinise the contents of the accounts. A number of key areas are worth highlighting. Firstly, the overall financial position and reserves. The accounts show that the Council's financial affairs were managed within its approved budget, delivering a surplus of 6.1 million. This enabled a 3.25 million transfer to the capital reserve, a 1.2 million contribution to the modernisation reserve, and a further 1.529 million retained in the unearmarked general reserve. The unearmarked general reserve now stands at 10.37 million, which is equivalent to 2.93% of the 25-26 net revenue budget. This remains within the Council's approved policy range of 2 to 4%. Secondly, focusing on capital investment. During the year, the Council invested 66.7 million in capital expenditure across both the general fund and housing programmes. This continued level of investment reflects ongoing delivery of key infrastructure programmes across the Council. Thirdly, the housing revenue account. The housing revenue account recorded an operating surplus of 687,000, increasing the year-end reserve balance to 3.17 million. And fourthly, a key technical development in the 25-26 accounts. This year's accounts represent the first year of applying SITFA Bulletin 22, and this introduced a revised approach for the valuation of property, plant and equipment. Implementation has been challenging, particularly given the lack of information on land indexation within Scotland. A methodology has been developed with our valuers and shared in advance with external audit. However, this is a developing area, and the valuations and disclosures may be subject to refinement during the audit process. And finally, the next steps. The Council, the accounts have been submitted to Ernst & Young for audit. The audit accounts will be returned to this committee thereafter, prior to being submitted to Council for final approval. Thank you, Chair. Happy to take any questions.
Thank you very much, Paul. I would like to open with a couple of questions myself before moving on to the committee. Page 77, it's note 14 of the accounts. It shows the authority's council tax income for this year and the comparative year. There's a bit of an increase there. Now I know that council tax rates did increase by 6%, I believe, but that only gets us to 67 million. So I've just wondered what the difference was. It's like another 1.8 million in addition to what we had from the council tax increase.
Thank you, Chair. If I could just clarify that the accounts relate to the year 25-26, and the council tax increase approved for that year was 8%. So the overall increase moving from one year to the next was 5.6 million. Roughly 5.1 million of that relates to the 8% increase, and the balance of about £500,000. That reflects an increase of the council tax base. We've seen the number of properties within the authority over the last 2 years or so increase. If we go back to 24-25, there was roughly 350 new Band D equivalents, and then in 25-26 we saw over 100 new Band D equivalents. So I think what we're seeing, we just have to remember that the new homes come in part way during the year. So when we're looking at these accounts, we're seeing the full year effect of the 24-25 movement. So that accounts roughly for the additional £500,000.
Thank you for that clarification, Paul. Of course, the council tax was 8% that year. That accounts for part of the missing number. I was really interested in the number of additional properties coming on. The other question I have is on page 78. It's note 15. So the authority has a number of assets under construction at the moment. Additions in a year, 34.8 million rounded. When those assets are constructed, what categories will they go to? Will it be clearer to see what value pertains to what specific asset?
Thank you, Chair. Yes, there are a number of assets within assets under construction. It just reflects our current capital ambitions at the moment for both the general fund and the housing capital programme. We have an ambitious capital programme and there are a number of new builds going on. So it is higher than previous years than you would normally expect, but it includes things like the new leisure centre. As at the 31st of March, any asset which was not fully constructed. So there are a number of city deal projects in there as well. So in terms of which sort of categories they would then be allocated to thereafter, obviously the new council house homes fall into council houses, the Ors Road into infrastructure, and in the main the balance is really land and buildings and would fall into that category of property, plant and equipment.
I fully understand that. Thank you very much, Paul. I'd like to open out now for questions. Members of the committee, have Councillor Wallace any other request to speak? Councillor Wallace, then Councillor Edlin.
Yeah, thank you, Chair. I think members will be aware that we all get forwarded from the clerk Audit Scotland reports, etc. Well, a number of external reports that come our way. The most recent one was the local government budget 26-27 bulletin, and as a result of that, actually, Improvement Service had a webinar yesterday, really going through what the key messages were about that. And as a result of that, I've sent a few queries to Chief Financial Officer, who I see is here, Kirsty Stanner. Rather than going through individually what these were and the nature of the individual question, I mean, they were covering things like, one of the key messages that was coming through from the report was the recurring and non-recurring savings that we can make every year, and that the emphasis really has to be on the recurring savings that we can have rather than depending on reserves, etc., and which, as we all know, that is limited. So, just to kind of cut it short, if you like, so things like budget covering saving reserves use, council tax contribution, and of course the HSCP support package, which is significant load for our residents. So I don't know whether maybe just perhaps an overview. Yep. Okay. Thanks.
Thank you for your questions, Councillor Wallace. So I did have a look at the table that you sent on, which related to 24-25, and I know the overview that was published recently was around the setting of the 26-27 budget, which is the year that we're currently in. And I had a look back because that's kind of taken the first year, the table that you provided, it's kind of 3 financial years effectively. And if we look back to the table that you provided, I think actually what it was covering was how councils had closed their entire budget gap and whether it had been done on a recurring or a non-recurring basis. So it wasn't necessarily just savings, it was every measure that had been used to close the gap. So it's fair to say in 24-25, which was the table that you sent, if we look at how the council budget gap was closed that year, there was quite a significant use of one-off measures. So there was use of 5 million of the service concession flexibility, which you'll remember was talked about quite a lot around that period of time, plus another 777,000 of general reserves. Alongside that, in terms of recurring measures, in 24-25 there was a national council tax freeze. So what happened was Scottish Government gave councils the equivalent of 3% to cover the fact that they were asking people to freeze their council tax, and that was on a recurring basis. In addition, the council agreed just over 3 million of recurring savings in that year, and they were recurring and they've continued to be so. So if you look overall then at the impact of those measures, that means that for 24-25, the recurring measures accounted for just over 51% of the closing the budget gap, and it was about 48% were non-recurring, and that's, you're right, that's not where we want to be. Looking at the following year, which was much more fresher, that's after I joined, so I was more familiar with that. That year we had a council tax increase of 8% because there wasn't a council tax freeze that year. In addition, we again agreed a portion of savings. There was some use of one-off service concession again, but in this instance it was only 385,000, and that was to close a budget gap that was over 7 million. So once you take the recurring measures, which are the council tax increase and the savings, that meant that 94.5% of the budget was set on a recurring basis, compared to just over 5% being non-recurring. Quite a big shift from the year before, and probably, to be honest, part of that is that 25-26 we got a better settlement from Scottish Government. And you'll remember that Scottish Government funding accounts for about 77% of our overall funding, so it's the biggest, it makes the biggest difference on our ability to close our budget gap. Coming into the current financial year then, where we set the budget back in February, we had a 6% council tax increase and we had a budget gap of about 8.7 million to close. We again had some savings that were approved. They were all on a recurring basis as well, and that was just over 3 million. But we did use an element of one-off service concession, which was just over 1 million. So looking at the percentages overall, that means we closed the budget gap using recurring measures at about 88%, and about 12% were non-recurring. And you'll remember that the specific set of circumstances we had in this financial year was the last minute change to some of the funding that gets given to us in terms of how that's calculated nationally. We found out late on in the previous financial year that there was going to be a big change to adult social care funding, and what we saw was that flowing through, which meant that the council ended up getting less funding from Scottish Government than it would have otherwise. And because the HSEP were obviously themselves in a recovery position, we talked at Budget Strategy Group about, rather than passing all of that cut to the HSCP at once, given they had had very little time to prepare for it, we would follow our own policy, which is set out in the medium-term financial strategy, to make limited use of one-off measures of the reserve of about 1 million to be able to soften that journey for the HSCP so that they'd have more time to prepare and continue with their savings plans as we go into future years. One of the things you did talk about in the questions that you sent were about the package to the HSCP, and there was an element of continuous funding that was baked into their baseline and some one-off support. So we provided some one-off support to the HSCP because they are implementing non-residential care charges this year, but obviously that's delayed until the end of June. So what we did was the council agreed that we would give them an element of funding to offset that delay, and that was £400,000. But next financial year, the charges will be in place and that'll be all up and running. Also to reflect the fact that they are obviously doing a lot of transformation to try to manage the recovery plan, we've also given £250,000 of non-recurring funding, and that's to bring in some additional support to support the leadership team in the HSCP around the big transformation agenda that they've got going ahead. You asked about the recovery plan and getting assurance around that. Obviously the IJB meets regularly. I think it's meeting next week, is it Leslie? And there are members from the council on the IJB. So there'll be opportunities at those meetings to really hold the IJB to account, and I know that there are a lot of papers coming forward in relation to some of that transformation programme at the meeting. In addition, obviously, when we get back in our budget strategy group schedule after the summer, after you've all had your well-earned break from it, we'll obviously be back talking about that and making decisions about what this will look like in the future years. One thing I would say though is, you are right, we'd rather not use one-off measures, and anything we do needs to be recurring, because as we've talked about quite a few times in the past, when you use a one-off measure, effectively it gets added to your budget gap the following year and makes it all the harder to close those budget gaps in the future. And 2 years ago, obviously the council was in a really difficult place where it had quite a significant budget gap, and it did use a lot of elements of one-off. And it is good to see that we've moved away from that substantially in the last 2 years, but it is something we obviously need to keep our eyes on moving forward, because we need to think about those years ahead.
Firstly, thank you for that overview, and I look forward to the follow-up with that as well, which is very informative. Just to say that the kind of consensus that was coming through from the meeting that we had yesterday was the damage that the council tax freezes have had over the years, in that a great vote winner in the sense that there's a perception that locally we're not having to pay any more in our council tax, but the reality is that any additional fundings that were coming from Scottish Government were ring-fenced. And really we're now at a situation, if you think about our education budget, which is over 50%, if you think about non-redundancy policy, when you combine all these factors, it gives us a considerable limited flexibility as to what we can do with our budget. And really just to sort of emphasise that the non-rises that we've had, or the council tax freezes, has had significant damage on what we are able to offer locally. And anyway, I'll leave it at that. But thank you for the response. And yeah, hard times ahead. But what I would say is, what did come through from the Audit Scotland report, from the 26-27 bulletin, was that East Renfrewshire, on balance, IJB aside, because we're not very clever on that side of things, and I think we'll come to that later on. But as the council, we are kind of mid-range as far as the pressures that we have compared to other councils. So thank you, Chair.
Thank you for your reflections, Councillor Wallace, much appreciated. Have Councillor Redland, anyone else for questions after Councillor Redland? No, okay, Councillor Redland.
Thank you, Chair. Could I ask a question related to page 86, cash balances, item 23 in that page? On 325 it was a plus 637, and on 326 it's a minus 3461. It's quite a big swing. Can you explain that, please?
I'm happy. Thank you for your question, Councillor Edlin. Sorry, I'll start, Paul, and you can add if I go wrong. Our cash balances change on a daily basis, substantially. So if you think about any given month, especially the first part of the year, a lot of people pay their council tax 10 months of the year. So there'll be a day of the month where we get the council tax money coming into the council, and there'll be another day in the month where we do our payroll run, and we have a lot of money coming out of the council on that day. We also pay our creditors, and at the moment we've got some big capital projects. So we also see days where we pay the creditor run, and days when we collect non-domestic rates from our buildings. So I think in general, you will see ups and downs on that, and it's nothing to be concerned about. What we do in the finance team is we keep track of the trends and the cash flow. So we have a really detailed cash flow analysis to make sure that the council always has the right amount of money in the bank account to pay everything as it's due, and we manage that in the round. And there's some days we have much more cash than we need, so what we do is we will then invest it overnight to try and get a return on that. And that's part of our treasury management function, and we sometimes talk about that when we bring the treasury management strategy and the updates and so on. So it doesn't really mean anything. We have talked about the fact that in general our cash balances are reducing over time, and that's because we've got a big capital plan, and we've been making use of our cash balances over the year to avoid borrowing. However, in terms of the accounts, it's nothing to be concerned about. It just depends on where the pay runs are on any given day on the 31st of March.
Thank you for that. Can I assume then on page 94, the creditors, which has increased from 20,209 from 13,838 a year ago, is the same? It's the same explanation. And also the other question I had was relating to charitable trusts, which are probably quite a vexatious problem for you in terms of the small sums involved. Has there any thought been given to rationalising this and adding on to that perhaps the Provost's defibrillator fund, which the tax relief will bring in probably 25 to 30% more income for that fund?
Thanks, Paul.
Thanks again, Councillor Edlin. We have discussed the trust funds in quite a lot of detail at previous meetings when they were brought to be signed, which I think was it November? And they'll be back obviously later in the year for this year. In terms of being able to rationalise them, no. They were all set up for a specific purpose at the time when the people left the bequests. And given the small scale as well, it's a bit about that cost-benefit analysis. It would be really difficult to do that. It would take a lot of officer time and the benefit would be really limited. I mean, one of the things we have done since last year is you'll recall that after that meeting we talked about trying to get the trusts used a bit more widely, and we shared with all the members a list of what all the trusts do and what the balances are to try and get that kind of knowledge out there that they are available to be used. And I know, Leslie, you talked about the fact that you're hopefully going to access one of the trusts to support a bit of work that some of the groups you're working with in the IJB will be looking to undertake. In terms of the defibrillator, again, it is a significant piece of work, and we wouldn't be able to repurpose our existing trusts around that. It would require setting up a brand new charity. And again, you are right, it's something we will kind of take away and bring back for discussion.
No, that's great. Thank you very much. I think it would be significantly helpful to the charitable activity of the defibrillator trust to make it a trust, because it would increase the income by a huge amount. And I think you can buy off-the-wall plans for skills, can't you? I think the work I think is straightforward. But thank you for answering these questions. Appreciate it.
Any further questions? No. Okay. I have another. Your microphone, Councillor Edlin. Thank you very much. I have another couple of questions more, and then I have a written question from Councillor MacDonald. In terms of questions, in terms of page 99, where we have disclosures in terms of PFI schools, in the next financial year, August 26, which isn't some couple of months away, we'll be taking some of these projects back into authority ownership. Now, I appreciate that's a post-year-end, post-balance sheet event. Are there any provisions that have been required to be made in these sets of accounts in respect of these projects?
Thank you, Chair. Yeah, under the sort of accounting standards, we would only recognise a liability or a provision where it's reasonably certain it's going to occur and we can actually attach a value to it. Now, in terms of the PPP, or PFI handback, accountancy colleagues have been working with others within the council and with the contractors in terms of the handbag, which is happening in August. We are not aware of any liability which will arise in respect of the handbag specifically. All the contractual liabilities in terms of the payments that we make between now and the contract terminating in August, they are all recognised and set out in the notes. In terms of the balance sheet, it's only liabilities at the 31st of March, but there are no specific liabilities relating to the handback itself that we know of and are included in the accounts.
Okay, thank you for that clarification. The next question is relating to page 103, note 37, impairment losses. So in terms of property, plant, equipment and assets held for sale, there's been a reversal of previous losses of 9.4 million. Paul, Kirsty, can one of you explain what this relates to and why we've had these previous impairments?
Thank you, Chair. All assets, all property and plant equipment, well, land and buildings, council houses, are subject to regular revaluations. In past years, some of those assets have reduced in value, and where that happens in certain circumstances, the losses are recorded within the comprehensive income and expenditure statement. When those same assets have been revalued this year at 31st of March, they have increased in value, and under the accounting rules we need to reverse that. So the 9.4 million that you're seeing within the accounts is a reversal of previous losses and reflects gains that have been recognised in the accounts this year. I'd also add that these revaluations don't impact on the council taxpayer in any way. They're purely accounting adjustments in order that we comply with accounting standards.
So that reversal of that previous loss does not have any impact on their spendable reserves?
That's correct, Chair. It's all recorded in an unusable reserve, so it would be either within a revaluation reserve or a capital adjustment account. They are not usable reserves. It has no impact on our council tax at all.
I was just going to add to that, thank you, Paul. This is one of the things actually that causes probably quite a lot of frustration in the public sector accounting world, because if you think of, say, British Airways or some other large multinational organisation, they're very balance sheet driven. It's about the assets that they hold and the shareholder value ascribed to that. We are not a balance sheet driven organisation, we're an expenditure driven organisation, but we still have to abide by the same sorts of accounting standards that you would see large organisations having to do. And obviously the valuation of assets, Paul mentioned that there was a new bulletin this year, and it caused, having to again look at approaches and spend a lot of time on this. And I think Grace is back there, would probably agree with me on this. It's something that we have to do, but it is not actually relevant to the running of this organisation. So it's always just to remember that when looking at the accounts. Thank you.
On that then, Kirsty, in terms of this capital reserve that Paul had referenced, most appreciate we can't use that for day-to-day expenditure, such as teachers' wages, etc. But can we use that in any way to reduce the council's borrowings for capital projects?
Yeah, that is absolutely what we use the capital reserve for. It is a usable reserve, and it's money that we have put aside to help support the cost of capital projects, and indeed that is what it's used for. In particular, if you look at the HRA capital reserve, there was an asset sale a couple of years ago, and it was put into the HRA capital reserve, the benefit from that, and it's been drawn down to support the council's house building programme within the HRA over the last couple of years. Yeah. So it's that kind of, it is tricky for a reader to understand the difference between usable reserves and actual reserves. And again, when you've got accounts that are 130 pages long with so many notes, it can be tricky, but that's really helpful to make that distinction.
Thank you very much. Moving on to my last question. It's on page 119, the non-domestic rates account. In your remarks earlier in response to Councillor Wallace, you had made the correct observation that the levers of power in terms of raising revenue for services are limited, because the vast majority of our funding comes from the National Block Grant. We then have council tax. I suppose the other element that's somewhat within our control is non-domestic rates, but it's not fully, because I understand it's centralised. I see this new entry here, non-domestic rate income retained by council under the BRIS scheme. I mean, is that a true reflection of the work that the authority has carried out to incentivise economic growth and promote business within the authority?
I'm going to start briefly and then pass to Paul, just in general about non-domestic rates. I think again, if you're a resident, you probably assume that non-domestic rates is like council tax for businesses, basically, and it's just the same sort of thing. It's really not. We effectively act as an agent for Scottish Government, collecting non-domestic rates in our local area, but they're put back into a national pool and redistributed out, and the money we get from Scottish Government already incorporates that kind of national pool of domestic rates. You know, from a cash perspective, like I was saying to Councillor Edlin, you know, the money does come into our accounts, we manage the cash flow, but in terms of funding, we are effectively an agent and it's distributed from a national pool. I'll pass over to Paul in relation to this specific element, the BRIS.
Thank you, Kirsty. In terms of the non-domestic rates, just as Kirsty said, it was a national scheme, and as you said yourself, Councillor Borison, our income is from non-domestic rates, forms part of the overall grant settlement. But the one area where we can generate some income, or we can retain some additional income, is the business rate incentivisation scheme. And the Scottish Government sets a growth target each year, and it's not a big percentage. It might only be 0.8% or so, but if your non-domestic rate base increases in value above that, then you can retain 50% of that income. And that's what you're seeing here, and that reflected in the 160,000, I think, which is detailed in the accounts. That takes, or can take, a number of years to flow through the grant settlement. So what you're probably seeing there is growth back in 23-24. While it's welcome as additional income, it's relatively modest in the scheme of 15.8 or 16 million of non-domestic rate income.
Thank you for that clarification. So in terms of, if I'm reading this report correctly, we have basically contributed 17.2 million to the national pot and received 16 million back after including that uplift for the incentivisation scheme. So we are net contributors to the tune of 1.2 million, is that correct?
It's not strictly true. We will be given our share, which I think, it's probably about 15.8, 15.9 million. And during the year, that would be our grant award for that year, and that is what we will receive, other than the business rate incentivisation additional income. During the year, we will provide updates to the Scottish Government about what we expect to achieve. Okay, and they'll build that into the grant settlement, but they will then either increase the cash that we receive through the grant settlement, or decrease the grant. And we have a big accrual in there at 1.3 million, but we will always come back to the agreed 15.89 million.
That's very helpful. Thank you. I now have a question from Councillor MacDonald, who has submitted this in writing because he was unable to connect to the meeting. So Councillor MacDonald's question is, the Chief Executive's salary increase was 8.4% for the year 24-25 to 25-26. The other directors, auditors and Chief Social Worker was an increase of 4.4%. Councillor MacDonald would like to understand why there is a difference. I can't attest to those numbers, certainly read them as presented. Thank you.
Thanks for the question, and thank you, Councillor MacDonald. So, a little bit of background. I'm sure members will know that pay awards are negotiated nationally with COSLA and the trade unions, both on the teacher side and on the local government staff side. The pay award that was agreed for 25-26 was 4% nationally, and the 4.4% that you see for chief officers is accounting for the time of the year and things like that. But it's basically, there's no local discretion around that. We basically award the nationally awarded amount, and it did distinguish between the levels that staff were at. I think if you think back to previous years, there's been time when the local government side pay award has had staggered amounts depending on the seniority, but this year it was a straight amount that was applied. In terms of the Chief Executive's pay, there has been an ongoing review of Chief Executive's pay around nationally for 20 years. I think it's come periodically back to COSLA across that time. And I think it was coming to reflect the fact that there are 32 chief executives around the country, and there had been no clearly established scheme to determine across those 32 councils, based on the size of the council, what the remuneration for chief executives should be. In addition, because of the bottom loading of some of the pay deals over time, the remuneration for chief executives in councils had not kept pace to those roles in other parts of the public sector. And of course, there is always a drive to try to get the best people for each role, and that means having to make sure that salaries are actually set at a level that is competitive with other sectors. Last year, the COSLA leaders agreed the implementation of the chief executive's salary review, and what that did was set out, I think it was 4 tiers of pay depending on the size of the council. So your Edinburgh and Glasgow being the biggest councils, they were in the kind of top tier, and then you had your smaller councils like your Shetland and Orkneys and so on, and then the ones that are kind of in the middle like Renfrewshire and things like that. It was implemented from, I think it was November, and it was agreed that at the time it would be phased in over 2 years. So chief executives would get 50% of the uplift in year 1, and the following year, which is this current financial year, they'd get the other 50% of the uplift. And that's what you'll see reflected in the salary that's put in the remuneration report for the chief executive.
Okay, thank you. Any final questions? Councillor Wallace? Councillor Wallace.
I was just going to say, with that question that went before there, I do wonder what the private sector would pay for a chief executive that has to look after a budget of 350 million and 4,000 employees. I think it puts a lot into perspective. So yes, it's more cost to our residents, but I think in terms of getting quality individuals who can actually do a job for us, I think it's been very important and long overdue.
Okay, thank you very much. Unless there are any dissenting voices, I propose that we accept the recommendations in the paper. That we accept the accounts. Okay, thank you very much. Thank you also, Paul, for all your work and that for your team in preparing these drafts. Much appreciated. Okay, moving on to item 5, Code of Corporate Governance and Annual Governance Statement. We have 2 officers attending. Presumably, Murag, be yourself speaking to this. Thank you.
Thank you, Chair. This annual report on corporate governance is an important part of the Council's arrangements to ensure there's proper governance of the Council's business, key processes and the use of resources. The report also includes a draft of the annual governance statement that's included in the annual accounts that you've just considered there. The Code of Corporate Governance is completed in line with national guidelines called Delivering Good Governance in Local Government, produced by SIPVA and Solace. And the code is based on 7 principles, each with a series of sub-principles and requirements. And the Annex 1 sets out our code organised by these principles. The principles are really wide-ranging: behaving with integrity, openness, defining outcomes, delivering interventions, leadership, managing risk and transparency. So you can see it's very wide-ranging and covers lots of parts of the Council's business. Each year we do a 2-part process. We have a backward look at the code that you agreed at committee last year, and we produce an annual summary of how we've done in terms of the improvement actions that were identified. So that has been completed and that's been posted on the Council website. So of the 10 improvement actions that were listed in the code last year, 7 were completed, and the details are outlined in paragraph 9 of the report, page 140. And the remaining activities that were not completed are carried through to our proposed new code. So that's the backward look of the process. We also then do a forward look at building a new code for 26-27. We do this by completing an assessment against the principles and requirements in the code during January through to March each year. We involve key colleagues across the Council, many of whom are here today, and we undertake a scoring exercise. We also ask colleagues to identify new examples of supporting evidence so that we can complete the scoring. The scoring grades are 1 not compliant, 2 partially compliant and 3 fully compliant. So examples this year of new evidence included the HSCP Adults and Healthy Communities programme, the medium-term financial strategy and the new financial training for budget holders that's taking place for officers just now. So on completing the review of the code, we feel that we are compliant with the majority of areas, apart from the exception of one area, which is under the section F, managing performance. There's a new national self-evaluation framework that's just been identified, and we're looking into as a council how we address that. So we've added that in as a new action, and we've scored that area as a 2 until that improvement action is completed. So as well as identifying and reviewing the code, even though we're compliant with the other areas, we're not complacent. We're always looking for areas in which we can improve, and a number of actions were identified, and those are outlined in paragraph 13 of the report. So altogether, taking the 3 actions that were carried over and the additional actions, we've got 9 proposed actions in the new code. For transparency, an annual update of, as I said earlier, of last year's codes already on the website, and subject to the committee's approval today, we will then post the new codes for 26-27 after the meeting. I mentioned earlier that the annual governance statement is also in the report. This statement sets out the governance framework, a review of effectiveness, and the key actions planned relating to governance for the following year. A draft, as I said, is included, and the improvements that are identified in the governance statement are also in the code, so they link together. So just to sum up, based on the evidence presented, I feel the Council has demonstrated it does have effective governance arrangements and complies with the code, and also as a set of improvement actions to improve for the following year. So the committee is asked to note the progress on last year's code, approve the new code, also consider the annual governance statement. So happy to deal with any questions. Thank you very much.
Thank you, Morag. Very much appreciated. I do have one question myself, then I'll open it up. On page 183, and you'd referred to this in your report, regarding some of the action points that were carried over from last year's plan. The second last point there, the development of the interface between the housing's software system and the authority's Integra financial system. I see that that interface project was discontinued, and a new interface will be planned to target March 2028. Simply wanted to ask, why was the project abandoned, and whether any cost implications of its abandonment. Louise, I think you're going to take this. Yeah.
Thanks, Councillor Morrison. I will. We've had a long-standing ambition to try to link up the Servitor system with the Integra system since we put the Integra system in, and the aim there was to have that real-time integration so that all of the orders for the housing service particularly could be seen in Integra rather than in separate systems as they are just now. We've had a few goes at it and trying to think through how we do that, and it's actually a really complex project. We had a contract with an external supplier that was running at that time, and decided to have a go at linking Integra with them and seeing if we could find a way to do that. But it actually just became too complex, and the project was going to, we were ending that supplier contract. It had come to the end of its phase, and actually to go on would have cost us a lot more money. Coalescing with that, our colleagues in the housing service had got more clarity about the systems and what they were doing with the systems in the future. So they are out to procurement just now to replace the Servitor system, and so it was felt that it would be better to align that with the new system that they'll be putting in. I see that I think we've maybe used a couple of different timelines in these reports today. I'm looking at that one saying March 28. There's something that says 27 somewhere else in the report, I think. The aim for the new system, if procurement goes the way we think it might, would be to go live with that in November 27, and then the linking of the two pieces would be part of that. So, thank you.
Thank you for that clarification. So, if I'm understanding correctly, it was an external supplier we had engaged to carry out that interface project, is that correct?
It was using our own internal staff, but we were using advice from an external supplier that we had for a different purpose as part of our data work in the council, and some of the work in our core systems programmes. So it wasn't specifically for this, but we thought, well, we had them there doing that work as part of a wider piece, then we would see if we could make this work with our in-house team.
I think you can see where I was going with that. You know, if we paid for an external service to be carried out and they didn't manage to achieve that, then there'd be questions regarding whether that should have been disputed. But it sounds from what you're saying that actually that wasn't what they were engaged to do in the first place.
It was covered within the spec of the broad contract in terms of the very broad terms we had with them, so no, but we didn't hire them specifically to do that piece, but it was covered procurement-wise by the broader contract we had. Thanks.
Thank you very much. Any other questions? I have Councillor Wallace. Anyone else after? Okay, Councillor Wallace.
Yeah, just say compliance looks very healthy. I appreciate there was one thing to do with the National Self-Evaluation Framework. I'd be interested to know what is it that we're supposed to be doing that we're not doing just now. But before that, I do notice in paragraph 14 when it talks about the new actions, the IJB is reviewing its governance, standing orders and constitution. I'm just wondering, is that just a simple housekeeping exercise, or is there something more substantive given what we know about and the problems we've had with IJB accounts, etc.? Thank you.
Okay. Who's the best person to pick this up? Leslie.
Thank you, Councillor Wallace. The review of governance of the joint board is simply part housekeeping in terms of a regular review. We look at a number of our policies and code of governance and so on each year, as does the council. So it's custom and practice to review those arrangements. What we have done is introduced a standalone governance report that comes to the joint board in addition to the annual governance statement that's in our own unaudited report and accounts, and that is to streamline some of the reporting that we take to the joint board and some of the reporting that goes to the Performance and Audit Committee, and ensuring that we're compliant with all the latest SIPFA guidance and legislation. So some of it is retrospective in terms of that look back, but also making sure that we're fit for purpose in terms of moving forward to the future. Some of you may be aware that there's been a change in legislation that comes into effect from the 1st of September this year around the membership of the Integration Joint Board and an extension of voting rights to members who are on the board with lived experience. So that changes, that will change our standing orders. So what we have the annual governance review, which is on the joint board agenda next Tuesday. The standing orders, for example, have been reviewed now, but there's the clear intention that they will be reviewed again in August once we've received that national guidance in terms of the extension of voting rights. So a bit like Morag has said, it's very much partly looking back in terms of making sure we've done what we said we would do, and also that forward look in terms of future challenges. It very much goes hand in glove with the annual governance statement, which is a statutory requirement as part of the annual report and accounts, as with the council. The other element from the joint board is clearly we feed into both partners in terms of that overall governance framework as well. So we need to make sure that we're compliant with all the relevant aspects of the council framework for those areas of social work and social care, and we equally need to make sure we're compliant with NHS Greater Glasgow and Clyde in terms of all the health components.
Sorry, before I come to that framework, if I just make a comment there if I could. From what I can understand, I mean, in terms of governance with IJB, and I appreciate what you're saying about the voting rights, etc., and the membership of that board. We as a council, so one of the partners, if you like, of the IJB, we as a council declared an emergency, and yet from what I can understand, members of the joint board itself don't believe that there is an emergency, because they only declare an emergency if they can't balance the budget. And the only reason they can balance the budget is they know that they're getting the support from the council. So just in terms of governance, it's just making sure that there is a strategy being put in place, a plan put in place that allows the IJB not to be reliant on on the council every year, because without that discipline, it's just going to be ongoing. Sorry, I see you're coming back in.
Thank you, Councillor Wallace. I think it's important to recognise that when the Joint Board itself went into financial recovery in 2023-24, we did indeed get additional funding support from both partners. As you're aware, we continue to have discussions with Council through Budget Strategy Group, but we equally continue to have discussions with our colleagues at the Health Board. And in 2024-25, the Health Board provided additional funding in excess of £1 million around prescribing pressures, and we've had additional funding of just under £1 million in terms of 25-26, in terms again of that underlying prescribing pressure, which is fairly unique to East Renfrewshire given our growing population. So I have to, from my Chief Financial Officer statutory role for the Joint Board, be quite clear that we have had funding support from both partners, and we continue to have joined up discussions across both partners in terms of that forward financial planning. So for example, when Kirsty referenced earlier the impact of the changes to adult social care distribution, that's reflected in the medium-term financial plan going forward. The Joint Board will need to look at finding recurring savings to close that gap. However, on the central government, on the NHS funding side, the Health Board has also been impacted by changes to its funding through the NRAC formula. The Health Board had a detrimental impact in 26-27, but have managed not to pass that on to joint boards in 26-27, but that may become a feature in 27-28. So I think that the challenges across the public sector landscape are fairly evident across both our funding partners, and we do work very, very closely with both. I think the other thing that I feel incumbent to point out is that we did go into financial recovery in 23-24. In 24-25, we ended the year with an operating surplus, albeit with additional in-year funding from the Health Board. And when you look at the unaudited annual report and accounts for the Joint Board this year, you will see again that there's a further addition into reserves. So the board ended last financial year, subject to audit of course, with an underspend of around £2.7 million. So that's still below, it's below the reserves policy. It's 1.47% of the closing budget, so it's below the 2% level that we would aim to aspire to in line with good practice and of course with the council, because the Joint Board is a Section 106 body. But I think it's clear to see that there is a fair amount of progress being made, and that puts us in a difficult place in terms of the level of savings that are ahead of us, but it puts us in a stronger place in terms of the forward planning and the savings programme, the transformation programme that's in place now. I hope that answers your questions.
No, absolutely does, and I don't underestimate what you're up against here, and I do appreciate you have to maintain that very strong relationship that the IJB has with the National Health Service. And I do appreciate they have upped their contributions to East Renfrewshire, but by the same token, that's within a backdrop of somewhere in the region of £8 million that was taken away from us from Scottish Government. So, as I say, I think we all appreciate the pressures that you're under, but it's just a recognition that we are residents within East Renfrewshire, and we as a council have to bear in mind we're here to represent our residents, just to make sure that everybody's looking after their particular budgets, and I do appreciate you're doing everything you possibly can to do that, and we thank you for that. If I could just, Chair, it was just that, the national framework, what we're not doing that maybe we should be doing. Thanks.
Thank you, Councillor Wallace. The National Self-Evaluation Framework has just been released in May this year. It's a joint project between Solace and the Improvement Service, and it's 32 councils working together and what can we learn from each other and how we evaluate and assess our services. So it's we as a council have got different approaches and very successful approaches to using evaluation, like in education, in terms of responding to external inspection reports, for example. But we just want to take this opportunity to be involved in this framework, like learn from peers and see if there's any scope for improving how we go forward. So that's really the reason why we scored it as 2, not because we're not doing things at the moment, it's just to actively participate in this national network.
Any follow-up questions, Councillor Wallace?
No,
Happy with
that's
that?
great.
Okay. Councillor Edlin next.
Just very briefly, just to add to what Ms Bearden said in relation to the IGB, the Scottish Government are making IGBs, I understand it, to have 2 new directors, one to represent the workforce and another one, I can't remember, one that will be joining the board, which largely at the moment comprises of health board representatives and council representatives. The people that are joining it are not funding it, they're just coming onto it. They will require to be trained, and that will cost quite a bit of money from the IGB, which is not going to be spent on patient or clinical care in any way. And it's also going to add to the administration and the work and the stress. And I just want to comment that I don't think it's an appropriate thing to be doing at this time, and that the IGB is under such huge stress by lack of funding. I'd welcome Ms Bearden's comment on that, in case I've got that wrong.
Thank you. Leslie, would you like to come in on that? Thank you.
Thank you, Chair. Thank you, Councillor Edlin. In terms of the legislation change to the makeup of the joint board, it is laid down in Parliament. There isn't a choice. It's a legislative change that we have to comply with. We already have members who represent the third sector, voluntary sector, and those with lived experience, our carers representatives and so on our joint board already. This legislation will extend voting rights, which is a change, and yes, that does come with a whole governance construct that will sit around it. We will need to look at accessibility to papers. We'll need to look at email addresses. You know, there's a lot of practicalities that sit alongside that, and we're not aware yet of any funding envelope that will come with that. It's not a case that it's not funded. It's a case that we don't know if there will be any financial memorandum that will come with it. If there's not, then yes, it's something that we will have to bear at a local level, as will every other joint board across the country. We have all known about this change in legislation. There was a fairly lengthy consultation period before the legislation was finally laid before Parliament and agreed. So there've been multiple opportunities for multiple stakeholders to feed into it. We have set up a short life working group locally again, so that we can prepare and place ourselves for this, for this change coming in. It is effective from the 1st of September. So you will see, for example, when we take our papers to the August Joint Board, there will be another revision to the standing orders, which will reflect the national governance on this. I appreciate there are polarised views in terms of the legislation itself and what its intention is. As the person who's responsible for governance around the joint board, it's a primary piece of legislation. We will do everything that we need to do to comply with it at a local level.
Very much. Yeah, Lee.
Thanks very much, Councillor Morrison. I suppose Leslie touched there on the different views around that, and Leslie's given that very comprehensive governance answer. I suppose as the personalisation lead for the Health and Social Care Partnership, while there is additional cost, and you're absolutely right, we were not clear about where that comes from, there is an added benefit from having the rich experience that people with lived experience could give to boards across the health and care arena, as with many other public sector forums. So I suppose it's just to add to that actually there may be a cost, and we don't know what that looks like, but actually that cost might be worth it, because we'll have the voices of people who use our services and their families at that table, who might bring solutions to situations that we're going to find really difficult over the years. So I suppose it was just to add that. Thank you.
Thank you very much. My own question is staying with IGB. So in terms of the review of the governance arrangement, standing orders and constitution, it's within the council's own standing orders regarding provision for access for press and public and webcasting of meetings. Now I appreciate at present the IJB does not record its meetings in the manner other council committees do. Out of curiosity, are you planning to review that situation as part of this review? You know, there's obviously growing interest in terms of the decisions the IJB is making. My comments would also apply to the Performance and Audit Committee relating to the IJB too, and I appreciate a response on that. Thanks.
Thank you, Chair. Both the Joint Board and the Performance and Audit Committee are open meetings, so members of the public, the press and so on are able to attend both, whether it's in person or on a hybrid option, and that has always been the case. The board have considered a couple of times in the past the options in terms of recording meetings, and you'll appreciate that the board is made up of elected members of NHS board non-executives and other members, including you know, our carers representative, our staff side representatives and so on. So the board have discussed this 3 or 4 times over the last few years, and the consensus, it's never gone to a formal vote, but the consensus has been it hasn't been required, and the board has been happy to operate as is. It's not addressed specifically in the review of governance because that last discussion was fairly recent. It was within the last 12 months or so, but certainly at any point, if there's any strength of feeling, either from within the board membership itself or any other stakeholder, it's certainly something that can be reviewed at any point in time.
That's very helpful. Thank you very much. Any final questions on this item, or assuming there's no dissent, I'm happy to accept the recommendations. Okay, thank you very much, and thank you for your attendance. Okay, item 6 on the agenda is a review of the consultancy expenditure log, and we have Linda Hutchison as clerk to the committee and David Hill in attendance. Linda, presumably you're speaking first.
Thank you, Chair. So this report relates to the committee's interest in consultancy costs over a number of years, and at the end of 2018, the Council agreed to establish a log regarding the appointment of consultants and reduce the threshold to allow directors to appoint them. In 2019, this committee agreed to review the log at the end of each financial year, and accordingly the log for 25-26 is attached. So the recommendations are that you consider the feedback and discuss if you feel any further action should be taken about that, and otherwise note that a further report will be submitted at the end of this financial year.
Thank you very much. Any questions from members? Councillor Wallace.
Thank you, Chair. I've got 3 things I'd like to look at, if that's possible, or queries. First is the housing stock assessment phasing. That seems to be the largest award. We've got £130,000, but it shows the lowest proportion that has been spent to date, around about a quarter or so. Just like to know whether is it on target, or the perception here is that it's maybe behind target, but it may well not be the case. Could you deal with that first? Is that possible?
Yep, thank you. Mark.
Thank you. Yes, it's a fair observation. It is behind at the present time. Part of the challenge behind that is we're still awaiting final confirmation of what the new statutory requirements are likely to be in relation to the energy efficiency standard in Scottish social housing version 2. Sorry to throw so many words in one sentence, but that's what it is. So we are continuing to work with Changeworks to try and get ourselves as close as we can to our understanding of what that requirement is going to be, but the final element of that is sort of contingent on confirmation of what the standard is going to be.
Thank you. That's useful to know. I'd be interested to get an update on that maybe at some point, see how we're going to get back on plan with that. Next one is, a lot of the consultancy seems to be focused on the Environment Department. In fact, 4 of the 5 appointments this year sit within the Environment, and it's largely relating to transport and planning. Is it just so happened perhaps this is the LDP3 and transport strategy, etc., that's necessitated this? Really, in short, are we short of the necessary expertise within the Environment Department, or do you feel it's it really doesn't warrant having these additional staff until they're actually needed for projects such as this. Thank you.
I just query who's the best officer to respond to that if anyone's in attendance. Mark, would it be yourself? Yeah.
I suspect it will be me, given I'm the environment representative today. I suspect it partly relates to the timing of these particular strategic reviews coming forward, and it is reflective of the fact that we have a relatively limited internal staffing resource available to deal with matters which are significantly complex, both from a technical perspective and in terms of the volume of work that's required to be carried out. So I wouldn't expect this to necessarily be reflective every year of the weight or balance of work that was put out the door to consultants. It's just reflecting a particular moment at time and a confluence of various different things within environment all landing at the same time and point in time and space.
Thank you. Any further questions?
Yeah, well, it's just for the background of that is just to make sure that we're not find ourselves in a situation that for short-term cost-cutting exercises that we're removing staff, where in the longer term it could be more advantageous to have that expertise. I'm assuming that may not be the case, but it's just something to keep an eye on. Just the last thing here, it actually mentions it in the paper. It was back in 2018, I think it was, that directors' discretion on taking on external consultants, we reduced that from 50,000 to 10,000, I think it was, for the cost of that. Now, I see one we've got here in education. There's actually an individual, and it's a 16,000. It's just to get confirmation that that went through the necessary procurement procedures. Thanks.
Debbie, I presume that one's yours.
Yes, thank you, Chair. Thank you, Councillor. I can confirm that it did go through a procurement activity, which is very stringent, includes a strategy document which outlines why we're going to market for the particular procurement. Obviously, it's a competitive activity which was responded to.
Thank you. I have a question myself in terms of the last item there, the transport assessment for Local Development Plan 3. I recall from the last full council meeting that this is going out to, the LDP3 is going out to public consultation. But I can see there that the end date for this was actually the 22nd of May. So it's really a query in terms of the timing here. I would put in the cart before the horse in terms of the transport assessment for the local development plan. Should that be getting put in place before the public consultation, or we have to revisit it after the public consultation?
Thank you, Chair. I did take some direction from the Senior Strategy Officer on this one, and the response is that the transport appraisal work to be completed forms part of the evidence base to support the preparation of LDP3 and the assessment of potential development sites prior to public consultation. This stage of work was intentionally undertaken in advance of the consultation to ensure that transport considerations are properly understood and can inform the identification and refinement of preferred sites.
Okay, thank you. And presumably in terms of the staging of the spend there was nothing covered as at March. It may be something that we would have to revisit then after the consultation.
That's correct. A forthcoming consultation later in 26 will provide an opportunity to gather further feedback.
Okay, thank you very much, Debbie. Any further questions for members? No? Okay, on that basis, I think we've completed with item 6. Thank you for your input on that.
Excuse me, I'm going for some fresh. This could be open in the meantime.
Okay,
There's some water here.
if we could have a window open for comfort in the chamber, that would be much appreciated. Thank you. We'll just pause proceedings until we... Yes, we'll take a quick break for 5 minutes. Thank you. Okay, thank you very much. We'll now reconvene the meeting after our brief break. We're moving on to item 7 on the agenda, which is the consideration of the local external audit report, best value thematic review, and this was prepared by the external audit team. So I would like to come over to Grace to speak to this. Thank you.
Thank you, Chair, and good afternoon, everybody. I'm very happy to present the findings from our best value thematic review of asset management. As you'll be aware, this work forms part of our wider best value responsibilities. under the current Code of Audit Practice, and reflects the Accounts Commission's thematic focus for this year, which is on how effectively councils are managing their assets to support corporate priorities, financial sustainability and net zero ambitions. Members may remember from prior years that our reporting is effectively answering the questions that are set by Audit Scotland to ensure that they can get a consistent view across all 32 councils. So overall, our audit found that the council has established a clear and well-developed strategic framework for asset management. It's underpinned by the capital investment strategy and long-term capital planning, which align investment decisions with the council's strategic priorities and are ever more informed by data-led approaches. We also found that governance arrangements are strong, with an increasingly clear one council approach and well-defined roles and responsibilities and regular reporting to elected members. The report does, however, identify a small number of areas where further development would strengthen arrangements, in particular strengthening the reporting of outcomes to clearly demonstrate how investment in assets does support the Council's strategic priorities, improving the link between asset management planning and net zero ambitions. So we included there a clearer tracking of how individual actions actually contribute to emissions reduction, and capital reporting focusing more on whether investment is delivering its intended benefits rather than just focusing on spend and delivery. We've commented previously on the Council's plans to achieve net zero and how challenging those plans are for all councils to achieve within the current financial envelope. So we haven't repeated any comments on that within here, but the recommendations are intended to support the Council in further improving how it demonstrates impact and the value of investment. I'll stop just there, but I'm happy to take any questions.
Thank you very much, Grace. Are there any questions? I have Councillor Wallace, Councillor Edlin, and then myself.
Thank you, Chair. There's 3 separate issues or queries that I have. First one is on page 201, and it's all to do with the Get to Zero action plan. From what I can understand, there's no legal obligation to get to net zero by 2045. However, there needs to be intent. Now, from what I'm reading here, there's a 370 million funding gap for net zero. I'd like to know what has been written into the capital programme that addresses that 370 million. And if we are not going to reach it by 2045, when is there a target that we're endeavouring to reach as a council? Thank you.
I believe Kirsty Stanners is going to respond to this.
Yeah, thank you. I think it's useful just to give a bit of background about our capital planning more generally before I get to that point. You'll know that every February we bring the capital strategy and the capital plan for the next 2 years to the Council for approval. And one of the things we as a leadership group had acknowledged that is, in general, when you look at our capital plan, the first few years have a lot of stuff in them, and then the later years are perhaps less populated. And we need to take that longer term approach, and Grace has obviously picked up some of that, especially with a place to grow now having been approved and a delivery plan agreed. The other difficulty, of course, is our ability to fund capital is obviously limited, and we talked before about the financial sustainability of the organisation over the medium to long term. And given that our capital grant for this current financial year is 5.7 million, which is an absolutely minuscule sum if you think about that we're actually spending 3.5 million on the roads in isolation. It does mean that the majority of our capital is actually funded through borrowing. So at the moment we have a very ambitious capital plan over the next couple of years. You can look out the window and see evidence of it around us in the park. But we are doing a lot of work, and in fact we met this week as a leadership team to really focus on some of the areas that have been picked up, which is about having that longer term approach, taking that time span up to 15 years, which aligns with a place to grow, and coming together as a corporate group to make sure that it's actually a corporate approach to capital planning that makes sure that we factor in some of the larger projects that might be required in the 10 to 15 year horizon, and make sure we have space financially for those, and we don't kind of keep going and spending a lot in the next couple of years and run out of capacity to actually invest in later years. So there's a lot of work that's going on around that, and that's been supported by the updated capital investment strategy that went to the Council in February. And what it set out in that strategy was some criteria to help support our decision making. So first and foremost, what the strategy says is we need to be safe, so health and safety is obviously our number one. We need to keep our residents safe, we need to keep our staff safe, we need to meet our legislative responsibilities, we need to have enough places for our young people in our schools. You know, those kinds of things are the kind of have-to-dos, and that's where you kind of start your process. Once you get past the have-to-dos, you get to your place to grow. How do we do projects that help us support our ambitions and aspirations around a place to grow? And that is really driving the capital planning that's underway, and which you'll see in the coming months as we discuss it in Budget Strategy Group before we get to the point of approving a future plan. Net zero is in that list in terms of the priorities, but let's be realistic. I've just said that we've got really scarce resources and we know we don't have enough money to do everything that we'd like to do. So we'll never have enough money to do net zero in its entirety, and we're absolutely not alone in that. I was at a meeting just a couple of weeks ago around a project that's been done with some other councils in Inverclyde, Renfrewshire and East Bartonshire. And Inverclyde is a council that's actually quite significantly smaller than us in terms of population, and their population's going down, so they've got about 77,000 residents, and we're getting up to sort of 97,000. They've done a bit of work and identified that to bring all their buildings, just their buildings, up to net zero would cost them £450 million. Now, our bill's a bit lower than that because geographically we're smaller and we don't have as many buildings as they do over their area. Being able to put a figure on it is helpful in a way, and it's something that helps us when we discuss it with Scottish Government, because there isn't funding of 450 million for Inverclyde or 300 million for us coming our way to do net zero. And it is a really tricky one as well, because often if you spend money to do things like retrofit buildings or change heating systems from gas to electricity, whilst you make a carbon saving, it can actually be more expensive to move to an electric heating system. So what we're trying to do in this capital planning is absolutely take net zero into consideration where you can fit it into other projects and it makes sense to do it. And actually there's a really good example of that this morning at Capital. We talked at Budget Strategy Group about that Invest for the Future funding for some solar and LED investment. And those make sense because not only do they help us reduce our carbon, but they actually give us a return on investment. They create an ongoing saving that will eventually pay for itself. So those kind of projects and plans make a lot more sense. Whereas when you get to some of that more expensive stuff like massive scale retrofitting, when you're having to borrow to do it, so you've got a cost of borrowing, and the net result is it costs more to run, it's really difficult in a constrained environment. So the reality is, and Grace and I have talked about this a couple of times, that recommendation will always be made by Audit Scotland, but we will equally never be able to make it. We will do our best with the funding that we have, alongside all of our other competing priorities, and that's as good as it gets, I'm afraid, in this reality. In terms of the actual date we could do this, I must admit I do not know. Thank you.
Thank you. Councillor Laws, further questions?
Yeah, just say thank you for that. I think we're all happy to understand that we're getting our priorities right and not just chasing a fairy tale. Okay, thank you.
Yeah, I'll happily second that.
Right, another one I have here. Yeah, the capital programme delivery. I know that there's been mentioned on page 206 about slippages, etc. Now, 3 projects are actually accounting for over half of the 25-26 programme, and just with the slippage that we have experienced in sort of less than 100% over recent years, just to understand where CMT are as far as delivery of that. Yeah, thanks.
Thanks for that. If we look at the current financial year, we have some really significant projects actually on site. So we've got obviously the leisure centre out there in the park and HQ, and they're both on track. And you can obviously see there's a lot of people working on these projects. You can see it as you walk past. So we have money going out the door for them. The work is happening, we're paying for it, and that links back to what we were talking about earlier about how we manage our cash balances overall for the council. Balgrey is also another big one, but it's also on track. And obviously Ors Road is now open, and we'll be seeing that come to a conclusion this financial year. Those big projects make up a considerable amount of our capital plan, which is very significant in this current financial year. There's a report on the capital plan, the capital monitoring, coming to the council meeting next week, which gives an overview of the slippage from last year and any changes to the plan that was approved in February. even with the changes that have been taken into consideration, at the moment our capital plan is looking like 75 million for 26-27, which will be the biggest capital plan this council has ever undertaken. But like I said, because we have assurance that these big projects are on track and they're delivering, we will be seeing those complete according to the timescale. In terms of the smaller things, you know, things like roads, we don't struggle to spend that money because we always have a list of what the priority is. And in terms of that, the roads team manage it within their overall budget. So sometimes things like, as you'd imagine, if the cost of the aggregate and so on that you use to resurface roads goes up a bit, then your buy-in value might go down, but they have a prioritised list and they'll do as much as they can in any given year. So that's not really a struggle. There'll be other smaller projects here and there that you will see probably slippage around. Sometimes we get specific funding for things as well from Scottish Government, and you need to then find the most appropriate way of using that money, and rather than rushing to do something, you take the time to make sure that it actually benefits the council area as well. But in terms of those big hitters, they're on, they're spending, and they're on track.
It's good, thank you for that confirmation. That's good to hear. And just one last thing, if I may, Chair. Excuse me, yeah. It's pages 211 and 212, recommendations and action plan. The three recommendations there, I see we have the Head of Housing and Property with us today. These three recommendations are coming under his ownership, if you like, and we've got, this is all going to be completed by December 2026. Just wanted to make sure that you're comfortable that you can do all that. Thanks. Sorry, just to confirm that you have the necessary resource to do it. Thanks.
I'm comfortable at the point at which I sit here today that is a realistic target which we should achieve.
Councillor Edlin, I think you're next for questions.
Thank you, Chair. Can I refer to page 198, the capital plan? This is for 2035-36, which is 10 years away. And in the paragraph that I'm looking at, the education facilities budget is 7.6 million over 10 years. Now, we're talking about LDP3, which will have 3,000 plus homes, which will require new facilities to be built. Bearing in mind that the average life of a school is 40 years, I believe, and the building of school buildings as they exist, and several buildings will need to be rebuilt at that point. Probably Mearns Castle may need to be rebuilt anyway. I know there's budgeting in there. If the cost of building a school is, but it will be at that time at least 80 million, I would think, at that point. I realise there's budgeting in there to extend Maidenhill and Mearns Castle High School, but with all these new houses and going on over 10 years, that seems a woefully inadequate amount. I'd have thought it would be, the amount should be about 100 million realistically, but certainly over 7.6 million. So I don't understand that number. I don't know if this is something that can be answered by Mr. Rogers or yourself, because I know Mark Ratter's not here.
Yeah, I'm happy to come in on that.
Councillor Edlin, your microphone. Thank you.
So I suppose the first thing to say is that, remember, and we've talked about this earlier on, LDP3 has not actually been approved yet. We still have to go through the consultation process and get to the final plan as agreed. We wouldn't expect to put anything into our capital plan until we can be sure what it is we've actually agreed on. A lot of elements of the infrastructure, so LDP3 has obviously been designed on an infrastructure first basis to try and take advantage of existing infrastructure that we have, albeit no matter what the final plan looks like, you're right, there will be requirements to add extensions or perhaps a new school or whatever it looks like, and I don't want to go into detail because, as we talked about before, we need to get to that point of it being published first. But there'll be elements of developer contributions that come alongside that, which will help to support some of that cost, albeit it will not be all of it, and experience has shown us that developer contributions never cover 100% of the cost of the infrastructure required. But when we get to the point of the LDP3 being finally agreed and adopted, we will absolutely be building it into the capital plan. In terms of our existing schools, they have a lifespan that is around more like 50 years, and we are currently looking at, as I said just before, answering Councillor Wallace's question, we're doing a lot of work right now to look at what the next 10 to 15 years are going to look like from a capital planning perspective, because we do acknowledge that the capital plan as is is very much focused on the next 2 or 3 years and not that longer term. So that's been acknowledged, and that's why we're looking at this just now, and we'll be coming to speak to members in the later half of the year in advance of February to shape out those later years of the plan.
Before you proceed, Councillor Edlund, over your shoulder, Mr Rogers would like to contribute also.
It's just a brief observation in relation to useful life of assets. So when you build a new school, for example, you might have an assumption of 50 to 60 years, it depends. But actually that is an indication of the expected life of an asset. It's not a determinant that a year 50 or 60 that asset will have no value, no further future use. If you think about that in terms of housing, for example, much of the housing stock across the whole of this country is pre-World War I and indeed interwar. So it's not the fact that it's exceeded an age that is an issue, it is actually the challenge of how you maintain those buildings appropriately throughout their lifetime. So two of the things that we will be looking at as part of the capital strategy review that Kirsty's been talking about is at what point do we need to think about you need to create a new asset, such as you talked about, Councillor Edlin, in relation to a school, and at what cost might that be. But actually another part of that is getting the balance right over the longer term between investing in new assets and existing assets, so that a proportionate approach to investing in new assets means that the ones that you do create will last longer than their indicative design life, and in fact the cost of keeping them maintained to such a standard is actually lower than would otherwise be the case. So there are a number of big moving parts in this. As to the cost of a new school, it depends. I mean, 1,000 pupil secondary school is probably coming in at about 70 to 75 million these days. You know, that is an indicative price, and as to how that will be funded in the future, neither Kirsty or I actually know the answer to that at the moment, but I come back to you with more detail on that when it's available.
If I could just add a supplementary to that before, sorry, Councillor Edlin, you go first. My question.
I'd just like to say that it does mention, it does say indicative capital plan for 10 years. So, and while we don't know what LDP3 is going to finally say, we do know it's over 3,000 houses. Now that means you're not just adding on to the people who are going to be living in existing houses, you're bringing in 3,000 families. Well, maybe not 3,000 families, because it would be retired people, maybe 2,000 families. It's an awful lot of people, and they're not going to all fit in the existing school buildings as they stand. So there is going to be a cost, and there's no indication in this of what that cost might be. Now, I appreciate that you want to see more definitive figures, but would it not be possible to let the members see what you might think it might be, rather than have it just a total blank? I appreciate that you want to keep the life of the buildings going, but we all know that Eastwood School was built 40 years ago and it was knocked down and rebuilt a few years ago. And while we hope for the best, school buildings are not known to always last.
Thank you.
Sorry, I hope you don't take this as a derogatory comment in any way.
So, I mean, I'll pass over to Mark on the last point. But remember that Grace and her colleagues are looking at the capital plan that was approved in February and was agreed last autumn. Think about LDP3. I know there was an officer working group yesterday. There's been a lot of meetings. It's been getting shaped up over the past, well, it's probably actually about 2 years by this point, because it's such a huge exercise, and we're still not at the point where it's actually been published and shared with the public. So there's absolutely no way that we can put into our capital plan details about what may be in LDP3 before it's been agreed. And as Councillor Wallace himself has said, you know, we need meaningful engagement with the public through that consultation process. So even what is being discussed at the moment may look slightly different by the time it's actually agreed. So we would not be putting in indicative sites, etc. In terms of the wider point about schools, as I've acknowledged, we are looking at that, and that is a bit of work that's underway right now. Again, taking Mark's point about investment in existing schools, which may be able to be brought up in terms of condition rather than incurring the new expenditure of a school, or whether a new school might be required in due course. That work is underway, and as soon as we're ready to share it, we will start to do so with members, which we expect to do in the latter half of the year towards Christmas.
Okay. Councillor Edlin, are you satisfied with that?
Thank you for that.
Okay, thank you. My question, well, I have two questions. Off the back of that, we also have another moving part, and I know colleagues have referred to Local Development Plan 3 as one of the moving parts that will inform the capital programme. It's not the only one. We also have the Education Estate report that's in progress, I mean, presumably that will inform what will be in the capital plan for the next 10 years also, when we actually have detailed information in terms of what investment is required to the existing estate. Is there any indication when that information may inform the capital plan?
So we've completed the fieldwork of the formal surveying process, and I think it links to the point that Councillor Edwin was making about prior year investment decisions for existing assets. And I think it's fair to say that this council, not by any means uniquely, this is a position that applies across all of Scottish local authority, indeed the UK, that there has been a need to get a better balance between investment in existing assets as against new assets, and where it makes sense to be able to do so, then we can look at how we extend or relife those assets to provide us with a long-term answer. In other words, simply building new is not necessarily an efficient use of public money when there are alternatives that are available. But I recognise the fundamental point that Councillor Edlin is raising is about underinvestment in prior years, and I agree with him. So one of the things that we were looking to do was to set an evidence base across all of the built environment assets that we have, buildings, to say, what is the zero base here? What do we know about what our future likely cost implications are going to be then? And then we can sit down and think about what we can afford to do or what is a priority over what period of time. So the fieldwork has concluded on that. The next phase of that is running between now and March 27 in terms of every built environment asset to think about what it is telling us in terms of cost and indeed viability of some buildings. Where there's a negative net present value, for example, we're going to need to have a significant conversation about retention, disposal or otherwise remodelling of an asset. But if we set that aside, emerging immediately as a priority are a relatively small number of schools which we've known about for a long period of time, and which we have now just in the process of getting the data sets back for. So we've had 2 of those data sets back out of the first 6 in the immediate period between now and the end of July, early August. So myself and Joe from Education will be sitting down and saying that's what it looks like in terms of what the picture is telling us. I don't have the final figures to be able to share with you. It would be remiss of me to even try to guesstimate them, but it is likely that the figures will be fairly substantial, and that needs to be seen in the wider context of all the investment needs that we have across every asset in the council. Because whilst it would be tempting for me to say from a property perspective, give me all the money for buildings, it's not just about buildings, it's about depots, it's about parks, green space, schools, fleet, all of these other things, ICT, and we've got to try and get that balanced package. But so the fieldwork is on time, it's being concluded. We are now into the analysis section. We've got some immediate priorities that we will be able to bring forward in August with education, and then as Kirsty talks about it, when we then get into budget strategy discussions, then that picture will become much clearer towards the end of this current calendar year, and clearer again by the end of the financial year.
Thank you for that. My other question, I think, maybe for finance personnel, it relates to the case study on page 199 Ernest & Young's commentary on the refurbishment of the Eastwood headquarters. I understand that the authority uses an expected payback period when considering certain investment options. A period of sometimes 10 to 15 years is used. We have quantified there that, well, Ernst & Young have quantified that the savings from this investment will be around £430,000 per annum. Is there any indication what the expected payback period will be there for as a result of that investment?
Thanks for the question, Councillor Morrison. I suppose just to start by saying, so this morning at Cabinet we talked about a payback for energy efficiency projects, and we talked about looking for that to be 12 years or less, which ties in with the SALIX payback period. And SALIX is the sort of national organisation that public sector bodies can access funding for energy efficiency projects. So that's specifically energy efficiency projects, so solar, LED, it might be something like a district heating arrangement or something like that. So I would take that to the side for now and say that in terms of that, that isn't a payback period would apply to wider capital projects, particularly because our buildings can have lives of 6 years plus. In terms of HQ, so before I get to your, and I am getting to your question specifically, but I think there needs to be a recognition that the HQ project had to be done. It wasn't about, you know, getting a payback. It's our headquarters. It's where, you know, we have our council chambers. It's where we are based. And that building was built before 1980 and has never had any significant investment in it since it was built. and most of the people in this room were based there, and we could definitely tell that day to day as we walked around the corridors and looked at the missing ceiling panels or decided to be really hot or really cold and nothing in between. But it was reaching the point where if investment wasn't made in it, we would have down the track had to either get a new HQ, which as Mark says, that the costs of that are far, far more significant, tens of millions of pounds, or we would have potentially had even more to do later on. So a lot of the work that's being done to HQ is about making the building safe, making it fit for purpose, heating, electrics, you know, the IT connectivity for our staff. A side impact of being able to do that work in HQ has been reconfiguring the internal layout to provide more space for more people, and that has provided an opportunity to come out of the Spearsbridge office. So the decision to do the HQ renovation wasn't because of Spearsbridge. The ability to come out of Spearsbridge was a benefit that was built into the HQ project, which would have had to be done anyway. It does give us a recurring annual saving to come out of Spearsbridge, and that's what's set out in the report. But obviously to do the work in HQ, we had to borrow some money to pay for it. As I've mentioned before, you know, the vast majority of our capital programme is funded through borrowing. So if I was to give you the sort of payback figure, people might, it's so big, you know, and it is compared to solar panels. So, you know, the capital cost for the HQ renovation is over 6 million, and it will save us $500,000 a year to come out of Spearsbridge. But we also have incurred a cost for loans charges for the fact that we've had to borrow to do the work in HQ. So if you were to take all of those in the round, the saving from coming out of Spearsbridge, the cost of borrowing and the cost of the project, it would mean the payback period would be over 26 years. Now that sounds like a huge payback and maybe it doesn't make sense, but the point I'm making is that we had to do it anyway, and we have managed to get a benefit by coming out of Spearsbridge on the back of the fact that we had to do this work in HQ regardless.
So presumably, if this work is in place, the last period between construction and investment is 46 years.
Yes.
So presumably any lifespan in excess of the 25, 26 years you indicated would mean that the project has a positive net present value.
Absolutely, and I think the thing is as well, it's avoiding more costs in the future which we would have had to undertake had the condition of the building been allowed to deteriorate even further. So, and you know, we talked earlier about, you know, wanting to be a high-performing council, and having those facilities where we can bring people together to really work with you, with each other, for our residents. That's going to be a key part of the delivery of the HQ project, which will benefit us for decades into the future.
Yes. Okay. Any further questions from members? Last opportunity? No. Okay, in that case, thank you very much for your attendance, Grace, and also for the report presented. It's been very useful. Okay, next item on the agenda is a consideration of a National External Audit Report on the Financial Bulletin 24-25 on Integration Joint Boards. We have Leslie Burden, Chief Financial Officer of the IJB here, and Linda Hutchison, Clerk to the Committee. I don't know, Linda, if you have an introductory piece to say on it?
Well, just very briefly to say that this report has been circulated in the normal manner, and Councillor Edlin's leading on it because it relates to the HSCP. As you say, Leslie Bearden's with us here today if you've got any issues you wish to raise about it.
Okay, thank you very much. Leslie, is there anything you'd like to say in beginning, or are you quite happy with the report that's been presented in the papers and we'll just move to questions? Okay, no worries at all. Thank you. Councillor Edlin, as a member of the committee leading on this, would you like to open with your remarks and questions, please?
Thank you, Chair. I don't really have any questions to say, just a few comments. I think it's a very useful report, and I think Ms Bearden's comments and paper that she submitted was also very useful. We have in the recent past declared a health and social care emergency in this council, and it's not an emergency in terms of accounting or balancing the books. It's an emergency because if you talk to any of the public, they are experiencing long delays in hospital treatment and various other issues as a result of the cost-cutting exercises that are constantly going on in government. And I have to say, I have to pay tribute to the staff of the HSCP, who really are being put under more and more pressure by this to to create, obviously they have to balance their budget and create a system that works, and they do it very well under huge stress at times. And I want it recorded that I've said that, because it's very easy to criticise and not praise enough. But I would say that this gives the reports give a fair summary of what the current situation is at the moment. Thank you.
Okay, thank you for your remarks, Councillor Redland. I'd like to open up to questions. Councillor Wallace then.
Thank you, Chair. I see it does mention in the report, page 222, that IGIB has a very significant challenge. It doesn't actually state what that challenge is in the report, but I do think it's been well articulated in recent meetings that we've had. We've also had some report on the reserves policy breach, which you mentioned earlier on, and I don't think we need to dwell on that. A couple of things I'm finding here. It seems to be that we locally feel that there's a £497 million funding gap, and yet the Audit Scotland figure has that at 449 million. So somewhere in the region of about a 10% difference. Keen to know where that difference comes from, what explains why there should be a difference there. And the second one, I don't know whether we can maybe have some comment. It mentions here about lack of transparency as far as recurring and non-recurring savings are concerned. That's on later on in the report, page 236. So I wonder, so that's two things. One is the difference that seems to be in the local and national funding gap estimates of somewhere in the region of about 40 odd million of a difference there, and about comment really on this apparent lack of transparency that we have in the report. Thank you.
Thank you. Leslie.
Thank you, Chair. Thank you, Councillor Wallace. I think in terms of the funding gap, there were estimated costs at a point in time. So the 449 million quoted by Audit Scotland came from a piece of work that was done by chief officers and chief financial officers nationally to assess the scale of the gap. And that 449 was at a point in time in terms of preparing for the 25-26 budgets in the lead up to it. A refresh of that by that national group then estimated that cost had risen to 497 million. So it's an estimate at a point in time of a coordination and consolidation of the work of the 31 joint boards across the country. That piece of work is updated on a semi-regular basis. It's obviously a fair amount of work in terms of collating all of that. So that's done two or three times a year, and is always going to vary just depending on the timing of it. So it's not our local assessment. That's the consolidation of the national position. The chief financial officers for the integration joint board, along with chief officers, have a national group, a national section, as do council section 95 officers and so on. So based on quarterly returns that are submitted to Scottish Government, given a consolidated position, the information will be extracted from that, and or a separate information gathering exercise. In terms of the transparency comment around the savings, it does tie in, I think, to comments that were made earlier in terms of public sector in general, where the use of reserves and the use of non-recurring funding has been in place to support savings delivery, and this report draws that out, recognising that that's not a sustainable option. There's clearly a very clear picture in terms of depleting reserves across the country. In terms of joint boards, we are beginning to buck the trend a little bit. We're I don't want to say on the up, but we're no longer at the very bottom. So, yeah, relatively speaking, we were one of the first to go into formal financial recovery. So I think what we're seeing here is very, very early tentative steps to show that we're now coming through that. despite the scale of the challenges ahead. You're right in that the scale of the challenge wasn't referenced specifically in this report. It was written before the 26-27 budget had been agreed and before we had refreshed the medium-term financial plan for the joint board. So we know that we've got an 11.3 million challenge in the current year, and the refreshed medium-term plan is on next Tuesday's joint board agenda, and that shows, using a high, medium and low scenario, the range that funding gap could well be going forward. I think from a local perspective, when I took this report to the Performance and Audit Committee from the Joint Board, we were very clear that we're very transparent, I believe, in terms of reporting on our savings delivery locally, and we do distinguish between recurring and non-recurring, and when you read the narrative against each of the savings lines, it gives the detail on what's been achieved, the timing of it. It's important to recognise that the scale of the savings we have ahead, there is that 11 million target in terms of 26-27, and that's one of the reasons that we're taking an early revenue monitoring report to the Joint Board on Tuesday, with the real focus being on that savings delivery. So that target of just over 11 million splits roughly 9 against social work, social care, 2 against health, and we've taken a red, amber, green status as we did throughout last year in terms of our progress against that, so that we can alert the board very early on if we think there's a potential shortfall, if we think we need to take further corrective action, and also allowing us to plan ahead, so we know that we've got the ongoing impact of the change in distribution, as well as the usual pressures that we will see each year. So that was a comment from Audit Scotland on their collation of the national position. I do feel quite strongly that locally we are quite transparent. We know that we will need to use reserves in 26-27 to help smooth in those savings. But like Kirsty, and on the council side, our focus is very much on getting a recurring solution in terms of savings delivery, so that we start each year with a clean slate, effectively, to give us a chance of moving towards that sustainability. I think the other thing that's important, and on hindsight maybe I should have said an opening remark, that our local position very, very much mirrors the national position, so it's not the challenges that our joint board are facing are not unique to East Renfrewshire. We are very, very firmly in the middle of the pressures, challenges, depletion of reserves, and that ongoing funding gap that has been seen across the totality of the country.
Councillor Wilson, any further points? Are you content with that? Okay, thank you very much. Yes, Provost Mundy.
Thank you very much. I'm looking at page 267, and when I looked at that, it occurred to me why people involved in this kind of, the users of the services are called patients, because they would have to have a lot of patience, because there seems to be substantial amount.
Sorry, Provost, page 267 you say?
267.
Yeah, sorry, that's the next item of business on the agenda.
Oh, sorry?
That's the next item of business on the agenda.
Oh, I jumped ahead. It was just because Councillor Edlin had introduced. Thank you very much.
Above we
No, that's fine.
first when we get to that item.
No, that's fine. Thank you.
Got to the page there and spotted it. Thank you. Okay, any other questions on the current agenda item? I have one myself. In terms of the report that has been presented from the HSCP, on page 220 of the papers, paragraph 1.25 and 1.26, you basically agree with what Audit Scotland have said. You said that the statement provided reflects our own position. Within that paragraph, it is stated that IJBs will need to make difficult decisions to secure their financial sustainability, etc., which could involve stopping non-essential services. I think we're past the 10th anniversary since the integration of health and social care across Scotland, and I remember the discussion at the time. It was intended to create efficiency savings. It was intended to avoid the complications that we discuss at the next item on the agenda. And it was designed so we could have more preventative spend, rather than health and social care services being reactive to everything. It was designed to be more proactive so that it would save more money and people have better outcomes in the longer run. But arguably those are the non-essential services that we're now having to remove to balance the books. Would that be a fair assessment of the situation, and what have we done in terms of lobbying the national government regarding that position? Because it seems to me that when there's extra money found in the national finances, it goes to the NHS because that's under the direct remit of the national government. But when it comes to the social care side of things, where the more preventative work can be done, we seem to be more often forgotten about. Thank you.
Thank you, Councillor Morrison. I will do my best to answer each of those. Maybe if I can come to the latter point first. I think when you look at the headline settlements between central government and local government, then yes, there's clearly some announcements in terms of health funding and that perception that a lot of the funding flows into the health system and not into the social care system. However, in terms of the world of the Integration Joint Board, we look at the funding as a total. The Joint Board takes those decisions and prioritises spend. Those directions come out to both partners. But I think sometimes what's not necessarily recognised is that funding that may flow through the health system still comes across into social care. So when we look at funding that's available to support the unscheduled care agenda, that focus the headlines tend to be around delayed discharge, hospital beds, hospital stays. A lot of that funding will flow through into social care in terms of supporting individuals to come out of hospital and back into their homes in the community as quickly as possible. We also have a number of initiatives that have been funded over the years where the funding source has gone in through the health route, but then comes across to the social care spend, either in part or in full. So some of our alcohol and drugs programmes, our recovery work, the Older People's Change Fund, we had multidisciplinary teams, winter planning. So the headline is that money is going into the health system, but a lot of it does flow through into social care, and we use that resource transfer mechanism to move that money between partners. And I think it's also important to recognise that within our health budget, we've got over £11 million, which is resource transfer, and that money comes across into the social care system and pays exclusively for social care. So beneath those headlines, there's a fairly complex environment, and a fair amount of those policy announcements will flow through into social care, as well as hitting the health side. In terms of the point you make around the move away from prevention, many years ago, when there was a lot of money in the system, there were some fairly extensive public health programmes, a real focus on prevention. Some of them have been pared back over the years. Within the HSEP, under the direction of the Joint Board, we've certainly taken out savings around community engagement, some of the community health and wellbeing programmes that the partnership would have funded in the past. But rather than just stop that funding or stop those services, part of what we're trying to do differently, and it's not just East Renfrewshire, because the report recognises we can't all keep doing more of the same, because the system's the system's not working, there's not enough resource. So what we always try and do is work with local partners to signpost people to assets that already exist within the community. So it's not taking away that lower level prevention support, but it's delivering it in a slightly different way through a different route, very much building on that system-wide approach. I think probably the most important thing to recognise is that in terms of social work and social care, there's a statutory requirement to provide that assessed level of need for those who require it most. So whilst we absolutely have to deliver and meet that statutory requirement, the only way that we can manage within that is through that criteria-based approach. So you'll all be aware that at the moment we assess care on the basis of substantial and critical need. It's a bit of a false economy to say that the one option open to us would be to move to critical care only, because generally the people we have we are supporting at the moment are at that higher level end of substantive need, but that is obviously one option. One of the reasons that we are looking at that transformation programme, very much focusing on outcomes, trying to get the overall best outcome for the totality of the population that we support, is recognising that we do need to transform our services. We can't keep doing more of the same, and that digital agenda will be one significant strand, because the world is changing. The world is changing around us. It's changing around the people that we support. So we are ever evolving to try and deliver more for less. I hope that picks up on the points you raised.
It does, and thank you for that very detailed answer. If I can come back on the transfer of resources that you referred to coming from the NHS Health Board to pick up some of the social care pieces, if I've understood that correctly. I mean, looking at the accounts of the Integration Joint Board, the lion's share, the substantial share of it, comes from the NHS Health Board rather than the local authority. And in terms of uplifts in resources, there does seem to be a lot more that goes to NHS Board than it does through the local authority. But it does feel to me, and I say this not as a member of the Integration Joint Board, but as an interested observer, if you like, that it seems to be the local authority and the work of the HSCP, what you do, that seems to carry the lion's share of having to balance the books, whereas it seems like the NHS is always going to be bailed out by the national government, is always going to be well funded, or funded at least, to provide what it has to do. So therefore the burden falls upon the HSCP side of things, the local authorities' contribution as well, when that's actually already the smaller element of what the IJP does. Would that be a fair assessment?
With all due respect, Chair, I'm not sure I could hand on ARC say it's a fair assessment. When you look at the budget contributions from both partners, the NHS contribution is that bit higher, but that will include a couple of very significant elements. So number one is the set-aside budget, which is about £33 million. That is in legislation, a budget that has to be identified, and that's East Renfrewshire's population's use of large hospital services. That's a notional budget. It's not a real budget. It doesn't come near the 177 million. That's the routine revenue budget from the Joint Board. So that 177 million, it's not quite half and half funded, but it's not far off. But when we look at our NHS contribution, again within that we've got over £30 million. That's the GP contract. So all of our GPs that provide all of those family health services, that contract cost for the GP practices that we have within the boundaries of East Renfrewshire is about £33 million. That's a fixed amount. We don't win, we don't gain from that. It's more or less fully funded. There's a tiny little pressure emerging there, but historically that has been fully funded. So when you take that amount out of the equation, our social care budget is actually significantly higher. And when you think about the £11 million then that transfers from our GGC contribution and effectively funds social care, the social care spend, the controllable spend, is certainly higher on social care. What we do have to do, however, in the joint board is balance both. We have to balance the budget in totality, and we have to look at how we do that against both partner contributions. As I said before, and I'm conscious of time. I don't want to waste people's time by repetition. But for the last few years, we've had an increased growing pressure coming from prescribing costs. Those prescribing costs result from GP prescribing. So our health board colleagues have been aware of that. They've taken cognizance of that, and they have given additional funding to support. I think the one thing I would say to maybe close this question, final part of the question, sorry. When we look at the uplifts that we get from each partner, there will always be Scottish Government budget settlement that will give conditions in terms of minimum amounts, minimum values that have to be passed through. If the health board gets an uplift, then the health board have passed that on to the joint board. Where there's decisions around policy funding, then each partner will pass through that policy funding. So whilst I appreciate the lens you're looking at it from the joint board perspective, I think it's a wee bit more nuanced than that.
I fully understand that, thank you. My final question is relating to paragraph 1.24, the one just before what we've been discussing. Audit Scotland have recognised that there is a need to redesign services and how we deliver services. Noting the last set of, not cabinet papers of the 28th of May, not the last set but the set before, it was noted in that the home care cost per hour, so it's for people aged 65 plus, had fallen from £40.60 an hour to £26.60 per hour, which is a substantial reduction. And if that can be achieved, that has been achieved by sustaining the same level of service to service users, then that's a big achievement. How was that attained, and is that sustainable? Is that going to deliver benefits for other aspects of service?
Thank you, Chair. It's a fairly complicated question to answer, as I'm sure you appreciate. So I suppose my starting point would be a rider that the local government benchmark framework, an awful lot of the measures in there are quite crude. They will take expenditure and they will divide it by activity, which in essence this indicator does. It's clearly a wee bit more complex than that, but that's the fundamental. I think Lee, who's the lead for the care at home service, will certainly testify to the amount of work that's gone into the care at home service redesign that has taken place over a multi-year programme of change, very much with a view to reducing costs. However, recognising that the local government benchmark framework was on the 24-25 costs. When we look at 24-25, one of the things we did have was a reduction in the employer's pension contribution. So yes, that is a factor. For care at home, that was about £870,000 non-recurring over each year for 2 years that came out of the system, and that equates to about £1.64 of that reduction in hourly rate. And yes, come 26-27, we'll see the costs go up again because the pension contribution has gone back up. But I believe that will be mitigated to some part by the extensive redesign work that has been undertaken. The service have worked hard to reduce costs. Rates were negotiated regularly throughout 24-25 in terms of the care that we bought from providers, agency use and recruitment were carefully balanced within the internal workforce, and prior to the local 10-year framework that's now in place, the service also made significant use of the Scotland Excel framework, all with the view to bringing costs down. So part of I suppose the reduction threefold. There was the pension element, it's not overly material. There was an overall reduction in costs, and then the number of hours that the cost gets divided by went up year on year. So the combination of a cost reduction divided by a high number of hours has led to a fairly significant decrease. I do recognise that costs and activity will change year on year, but as I say, with the amount of work that's gone on the care at home redesign and the amount of detail that's been reported to the joint board, there's fairly extensive evidence to show the impact of that redesign, and we are now in the place where the 10-year local framework is in operation, effective from 26-27.
That's wonderful news. Thank you very much. Final opportunity. Any questions on this? We're happy to note the report and move on. Yeah. Okay. The next item is a further external audit report on delayed discharges, staying on a similar theme. Go to the clerk now to introduce this. Thanks.
Well, similarly, it's been circulated. Councillor Edmonds, the lead, and Leslie Bearton's here if they've got any questions that you want to ask.
Thank you. And presumably, Leslie, we're happy to just move on to questions. There's nothing you want to say in addition to. Okay. Councillor Edlund, would you like to?
Just very, very briefly, I haven't looked at the papers for next week's IJB, which updates it, but I understand that locally we're doing better over delayed discharge in the national picture. In fact, the last time I saw the numbers, it looked pretty impressive, actually. So, I mean, I know Lee's here and she can comment on that if I've got it wrong.
Okay, thank you. Any questions from members? Councillor Wallace?
Yeah, thank you. Just a couple of things. Power of attorney seems to be an issue. I'd be interested in suggesting that a third of delayed discharges would appear to be as a result of lack of power of attorney information. I'd like to understand what we're doing about that locally, how we compare with that. But another interesting one, it states in here that locally our strong performance, relatively speaking, specific initiatives such as Home First, System Reset, Digital Strategy, for example, has been put down to the reasons for that strong performance. And yet there doesn't seem to be any national indicators that we can compare against. I mean, it actually states in there that there's been no consistent evaluation framework nationally, no cost data since 2021, and no replacement national target. So just understanding how do we assess that there are specific initiatives in which we would appear to be doing better than nationally when a national information doesn't seem to be there. So that's two things. One is the power of attorney exposure, which seems quite straightforward by everything else you're having to deal with, and this one about how we compare ourselves nationally. Thank you.
Okay, come in. Thank you, Councillor. Power of attorney. We are sitting amongst the middle of the pack in terms, we're seeing that trajectory across Scotland in terms of increased numbers of people who don't have legal decision makers in place. Locally, we're doing a range of different initiatives through some of the work that we do when we see people on their frailty journey. So we're doing lots of proactive work, encouraging individuals and their families to make power of attorney earlier on before they reach that admission to hospital. We're also doing that in partnership with the Carers Centre, and we're part of a group that's looking at national campaigning around that to remind people of the importance of doing that. But I would say across the country we're seeing that trajectory going up the way in terms of individuals. There's also been a number of Mental Welfare Commission reports over the last 10-15 years that provide very clear guidance around the legal powers that individuals must have in place before we can move them from hospital. So I'll not go into the detail of all that, but it is fairly complex, and it's about that human rights approach to individuals making that decision. In terms of the kind of wider strategy, we do have local initiatives led by the board, so there's 6 GGC HSCPs. We all sit together and we work together on that. On overall unscheduled care activity, we report into the board and both into the IJB the kind of key priority areas. We measure the impact, we measure the costs around that. over the last maybe year, maybe just less than that, we have had national meetings with the Cabinet Secretary, a number of members from COSLA, to look at exactly what you're saying, that shared benchmarking, sharing good practice, scaling up initiatives that work in particular areas. So I would expect next year's report to say stuff, to have a bit more detail in the questions that you're answering, because there's been a journey in terms of collecting that, if that makes sense.
Yeah, just to note, there must be a concern that we do not seem to have very good national benchmarking that we can compare ourselves against, but I recognise that there's an initiative to try and do something about that, so thank you.
Okay, thank you. I have Professor Munster, you have a question? Yes, please go ahead.
Thank you very much, and sorry I scrolled too far ahead for the last item. It was just the statistics are very reflective of the experience of many families, and it is a frustration. Page 255 just gives us it in a kind of compressed way, the 750,000 hospital bed days lost due to delayed discharges in the report we've been given here. 1 in 9 proportion of beds occupied due to delayed discharges, people who shouldn't be in hospital. And of that, the age group is 66% are 75 years and over. And the information that I was referring to previously on page 267 gave an indication of why that was happening, how people are waiting. And my joke that's misfired now was no wonder they're called patients, because you would have to have patience to do all the waiting that's indicated there. I've lost the place now, 267 I think it was, it gave you a pie chart, yeah, and it was waiting for care package, waiting for a care home place, waiting for an assessment, waiting for funding and transport. Considerable amount of waiting that reflects unmet need and under-resourcing. And it's the human aspect of that age group that I know when I was looking after my mother, that they can be susceptible to hospital-borne infections, and it delays their discharge further. And so, yeah, it's good to get this, but I would hope that it can be improved for any future reports that we get. Thank you.
Thank you very much. I think that's a very important point, that it's not just the financial aspect of it, it's the outcomes and how it affects people, particularly people that are perhaps in more advanced years and want to, spend their time in a quality way. I actually have a similar question relating to that Exhibit 2 on page 267 as well. 28% of delayed discharges arising due to awaiting availability for a place. Now, some of those institutions, for example, a care home, very few of those places within East Renfrewshire are actually within the local authority's direct responsibility. Most are presumably procured through the private sector. So what levers of power do we actually have to address this issue if we don't have direct control over where patients would be going to? What can we do about that?
So I suppose the first thing to say is that the national picture here is not reflective of the local picture, and that we very rarely have individuals waiting on a care home placement to come out of hospital. Sometimes how the information is collected and reported would capture they would describe it as a wait, but what I would tell you is the detail is that families are making choices around the best care home. So there might be an individual in hospital, but time families are going around making that choices. We're not pushing for them to go to a care home that's not their preferred care home placement, and that would be reported as waiting. I would describe that in a very different way around being person-centred and working along with families to make that decision. So that's the first two things that I would say. You're right, we only have Bonnyton Care Home within our direct control. However, we do have a national care home and national nursing care home contract, which means that we can have some power and levers around the costs and the expectations around quality. I would say there has been times where it's been tight and a bit more challenging for us to place people who are not able to top up or self-fund themselves. That's not the case just now. We're currently sitting with 50 vacancies across the system, that there's no individuals that are waiting for care homes or care at home, I would say. So it was just to give you that reassurance. And the bit in terms of Provost previous statements, I can absolutely assure people that behind every single one of these numbers is an individual, and we know that, and their families. And that in East Renfrewshire we support over 200 people every single month to be discharged without delay. So it's a very small number of people that have those more complicated needs or challenges that may have to wait. And I don't undermine that in any way, but it was just to set the context in that bigger picture.
That's very helpful, thank you. Are there any final questions on this item? No, happy to note the report in that case. Okay, thank you. And thanks to the HSCP staff for their input, extensive input in various items to today's agenda. Moving over to item 10, which is an update on implementation of the internal audit plan for the period Q4, January to March 26. And I'm going to invite Ian McLean to present and update that. Thank you.
Thanks very much, Chair. Yeah, reports have been issued relating to planned 25-26 audit work during the quarter, and they're included at Appendix 2, page 300. Details of reports where we've received responses in the quarter are also included at Appendix 3 and page 303, as usual. There's been no issues raised of major concern or that would appear in the annual report. You'll also maybe note that the reports issued 25-26 onwards now have an overall assurance rating, which was the outstanding recommendation from our external PSIAS review. There were 11 recommendations categorised as high within these reports, and all have been accepted for implementation by management. In summary, in vehicle services, high recommendations focused on inspection paperwork being signed and completed, alongside access arrangements at the office. The homelessness audit included high recommendations around the 4-week review process, reconciling invoices to subsidy to maximise income, and finally around void property turnaround times. Within the home care service, high recommendations are made targeted towards bringing review work up to date, ensuring all implications of reviews are actioned, and there should also be a review of the overtime process to utilise system-based controls. The scheduling system should be regularly reconciled also to the care management system, and steps should be taken to ensure the most efficient scheduling of staff time with service users. As noted quickly in the covering report on page 297, there's been no new items using general contingency, although some general contingency was used for ongoing queries. Appendix 4 shows progress against our performance indicators. All were met at the end of the year, apart from the measure of time taken to issue the report from the start of our fieldwork, which was within 1 day of the target. Good progress has been made, with 13 reports issued in the quarter, leaving just 3 to be finalised to fully complete our annual plan for 25-26 at the time of writing the report. 1 has since been issued, with 2 expected to be issued very shortly. So, subject to any questions, the committee is asked to note the internal audit progress report for the quarter to the end of 25-26 year.
Thank you very much. I would have a small ask in that I think given the number of high-risk recommendations, certainly from a personal point of view, I would quite like to see the reports 1259 on homelessness and 1263 on home care in full. If that could be mailed round all members of the committee, it would be much appreciated. Obviously, if there are any other reports people would like to see in full, you're of course welcome to email to request that directly. That would be much appreciated. I do have a question myself whilst I have the microphone. On the homelessness report, I appreciate it might be answered directly by the responsible manager. Whilst the national government has removed the local connection requirement to present as homeless here in East Renfrewshire, do we still track that information even though it's no longer a requirement? Would we be in a position to look at the information and say, actually, if this law was reinstated and you had to have a local connection to present as homeless in East Renfrewshire, we would no longer have a homelessness emergency?
That's a particularly tricky question, so I'm going to try my best to answer as best I can. I think to start with, so my service has regular contact and discussion with the Scottish Government about the impact of homelessness generally on a Scotland-wide basis, and in particular we regularly speak about the I suppose cross-border overflow impact from Glasgow in particular, but from other parts of Scotland. Unlike England and Wales, for example, you may make a presentation anywhere to any of the 32 local authorities in Scotland, and that is a challenge. I suppose some of the feedback that we've had in relation to this, and I'm not saying I necessarily agree or disagree, I'm just reflecting on comments I've received from elsewhere, that there is a view that's been expressed that recording how many people who actually make a presentation to us as having a local connection, as would have previously been expressed under prior legislation, could perhaps be considered to be not strictly in the spirit of the legislation, which led to the whole purpose of that requirement being removed in the first place. I'm sorry to torture the language so badly, but I think you understand the underlying point that's being made. And so while I will go into give a little bit of context in a second, I suppose I would give a general caution about how we discuss this in a public domain, given that the intent of the legislation was to remove any purpose behind recording that information and actually having a comment on it in the first place. That said, I accept that members have quite a lot of contact in relation to exactly these questions, and so I'll try and give some indicative evidence which might help move this on, and I can always answer more questions in detail by writing if members have a further interest. We can circulate a briefing paper on it. I suppose if we thought about it, local connection as expressed as in the way that it used to be beforehand, those broadly speaking that would have had a connection solely with this local authority area, because it is possible to have a connection to more than one local authority area, even under the old rules, if you like. So purely to East Wren, about 54%, very roughly, to East Wren and another local authority area, another additional approximately 14%. So if you wanted to look like that, somewhere between the high 60s, early 70s% of local connection, as would have been understood and expressed under the previous legislation, would have been the case. And that obviously does create a challenge in terms of managing scarce resources, but it is a challenge that all Scottish local authorities face. A substantial proportion of the persons presenting for assistance across all of the 32 local authorities do not have any known local connection with any Scottish local authority, or only have a connection with another authority and not to that authority as well as another authority, if you understand the point that is being made. We have made these points back. I think for those who are authorities that are next door to the Glasgows of the world, and the same is true in Edinburgh in terms of the bordering East, Mid, West Lothian and Fife authorities, for example, they have exactly the same pressure in relation to the significant pressures in the East. I suspect, though, that part of the challenge is that there does not appear to be any desire at the present time for the current guidance and law to change, albeit that we continue to make those representations back saying, you know, one of the challenges is how do we provide housing to people who are resident within our own boundary areas and balance that up against the legislative requirements of the Scottish Government. I do apologise for that answer, but I did say it wasn't straightforward.
Yeah, no, I fully appreciate that. I mean, looking at the overall issue, it seems to me that the authority for a number of years has had a fair handle on its population, what the likely demand would be, and had effectively planned for that over quite a long period of time within its housing stock and its policies. Now, over the past 4 years, there's been multiple changes I can see made by the administration in terms of changing its housing allocation policy, etc. There's been quite a number of projects to try and increase the council's housing stock, and it seems to be anyway that the issues for East Renfrewshire really started when that national rule changed around removing the local connection requirement. So that was where my question was coming from. I don't know if there's anything you wish to say further to what you had already said, Mark, or you want to move on?
I think it's a combination of two things. I think that's a fair comment to say that the change in the way in which local connection has been put in place is one of those factors. there was the long-term decline in actual social housing rented stock in the first place, which in recent years this authority has put a lot of work in, as you've recognised, to try to resolve. But I suppose the combination of both of those factors, if I look at them in the round, reduction in supply over time, which is gradually being rebuilt, and the challenge of no local connection, is the authority will struggle to cope with demand, however that demand has arises, and without being overly gloomy about it, there is no way we will build our way out of that current position, full stop. It's simply not deliverable. So until there is perhaps some willingness to be flexible around the overarching rules and indeed funding of additional housing, then that is going to remain a very significant problem for us and indeed pretty much every other authority.
Fully understand. Thank you. Any other questions or observations on the paper more generally, on the other audits perhaps? No? Okay, I have one final question with respect to the home care audit, where it's noted regarding manual input and use of spreadsheets out with the payroll system for overtime. So that was recommendation 4.3.2. I'm aware of the fact that not every council employee has, they're not sitting in front of a computer all day, that it's very hands-on work. I'll be happy that the staff in the home care team would actually have access to the resources required to be able to comply with that recommendation.
Yeah, I'm happy to answer, and I don't know if Ian wants to come in. So all 124 home care reablement workers, so frontline home carers, all have access to a fully functioning mobile phone. They mainly use that for accessing scheduling of visits, any urgent updates with respect to people's care, key messages from across the service. They can access online training. They do have access to iTrent, which is the system that you're talking about. Given the demographic profile and the digital confidence of that workforce, we are working across the next few months, we expect by late summer. I think the date we've given ourselves for full implementation is September, for all of our staff to have access. They already have access, but to have the confidence to be able to use that system to record things like annual leave and overtime. People are at different stages, so we've invested quite heavily in supporting that workforce. I hope that answers your question, Ian. I don't know if you want to.
It does. Thanks very much, Lee. Okay, on that basis, the two audit reports were circulated full. No other questions, so happy to accept the report. Yeah. Okay, thank you. Item 11 is the internal audit annual report for 25-26, and I believe, Michelle, you're taking this. Thanks.
Thank you, Chair. One of the primary functions of internal audit is to provide an assurance statement to the Council on governance, risk management and internal controls. And there's also a requirement to produce an annual report which reports on the activities of internal audit during the year. So 25-26 was a very successful year for the team, and all audits in the plan were completed. At the time of writing, as Ian has mentioned, there were 3 audits still to be issued. It's now only 2, and they should be issued in the next few days. There's nothing in these 2 remaining audits that would impact on the assurance statement. Satisfactory responses have now been received for all the reports issued during 25-26 where the dates have passed, and all recommendations were accepted by management for implementation, and we'll follow that up in due course and report to Audit Committee as usual. Throughout the year, details have been provided in progress reports of higher risk recommendations, and also, we as you know, we circulate all follow-up reports. In terms of contingency, it's quite a difficult area to budget for. During 25-26, we used up 50 days out of a budgeted 80 days across general contingency and fraud contingency. There was only one issue investigated using fraud contingency, and this related to a theft of cash from a council location, which has already been discussed at this committee. Police were made aware of this, and an internal report was sent to the Director making recommendations, and all recommendations were fully accepted. We've not checked implementation yet. In terms of general contingency, we looked at several areas, as already reported to the committee, and these were mainly looking into council tax anomalies, which is a kind of ongoing issue. We helped external audit with additional housing benefit subsidy testing, and assisted some departments in implementing audit recommendations and making improvements. Moving on to internal audit indicators, a summary of these is given in Appendix B, and it's also covered in the covering report in Section 6. One target was not met, and this relates to the overall time taken to complete an audit, and this was partly impacted by departmental delays in responding to requests to clear factual accuracy, and it's also impacted on if there's people on holiday and busy with other things. The main thing is the annual assurance statement is in Appendix A on page 321. It can only provide reasonable but not absolute assurance against loss, and it's based on a number of sources of evidence, such as work done by both internal and external audit, inspection agency reports, and also annual assurances from each director. The statement's made subject to all agreed recommendations being implemented by management, and I would restate that prime responsibility rests with management to put in place appropriate controls. My conclusion is that reasonable assurance can be placed on the adequacy and effectiveness of the Council's framework of governance, risk management and internal control. And I would ask the committee to note the report of the annual report and approve the annual assurance statement and submit it to Council. I'm happy to take any questions.
Thank you, Michelle. The recommendations in the report are simply to note its contents. Are there any questions, however? Councillor Wallace, no other requests.
Just one very small point. Page 323, quality. What we've got 0003. What's that in reference to? Do we send out?
It was an indicator that was, if you remember, years and years ago, Audit Committee approved all the indicators, and that one was approved by the committee at the time. But in recent years, we haven't sent out questionnaires. Probably about 4 or 5 years ago, we did send out a questionnaire, but it was the Chief Exec at the time decided that we should put it out as the whole Chief Exec's department, not as internal audit. But there hasn't been one done in recent years, and probably because of the implementation of GIAS replacing PSIAS, we're probably overdue to look at the indicators and bring them back to Audit Committee for approval, so that we'll review that one.
Certainly sounds like that's something that we should be doing then, because if it's no longer important to measure it, it shouldn't be there, because it can, take attention away from the things that we should be measuring. So, yeah, any further points on that, Councillor Wallace? Or okay, on that basis, I think that everyone is happy to accept the recommendations. Right? Okay. Which brings us on to the last item on the agenda, which is an update on the implementation of our self-evaluation. So over to Linda for that.
So thank you, Chair. This report provides an update on the implementation of the action plan that was prepared following the completion of the committee self-evaluation in late spring 2025. As you know, the committee supports periodic self-assessments, but albeit not as frequently as annually, and as reflected in the 26-26 work plan, it's intended to complete a further self-assessment in late 2026, early 27 prior to the local government elections, so that will be the end of administration review. The appendix to the report covers the full list of observations and recommendations, both made and approved by the committee last June. They're listed by the relevant self-assessment template question number, so there are some gaps if there was no comment or recommendation made against some of the questions. So I'm asking you to note the progress made in implementing the action plan, and also, as agreed previously and reflected in the work plan, note that it's intended to complete a further self-assessment in late 2026, early 2027. I'm happy to take any questions.
Okay, thank you for that, Linda. Unless there are any questions, I propose that we accept the recommendations. Councillor Wallace has a question.
Yeah, it seems to come up on 2 occasions now, is that we have stated that, if we want to do meaningful scrutiny work, then we need the resource to do it, but quite clearly we've kind of established that the resource isn't there. So it's just to get an understanding of how the committee feels about the existing setup that we have for scrutiny. I mean, for example, I think today is a perfect example. We've had, 9 items which were very intense, a lot of scrutiny required for that. It's just to see, I'd like to first understand why we have so many at one particular meeting. I'm sure there'll be very good reason it's just happened that way, but whether or not timing could be, whether some of these reports could be spread. But secondly, just that we just to ensure that we're all comfortable that we do have the resource, that we are scrutinising to the best of our ability given this limited resource. Thanks.
If I could respond in the first issue about the size of the agenda, this year the election did impact on the committee timetable, so there's actually one less meeting there that we had to take out of the calendar. But you're right, it is driven very often by when things have to be considered or when things are published. So for example, we have to consider the unaudited accounts at this meeting of the committee. In a way, this report is an exceptional item because it wouldn't be there normally at this time of the year. Where there are external audit reports to consider, we take into consider how long it would be reasonable to expect officers to have to reflect on the report on their publication and prepare something. And where possible, we try and spread the load on that a bit over a number of committees, but sometimes it's just simply impossible to avoid a bunching of items, as in this particular meeting. I would say it is an unusually long agenda. As to the other aspect of the question, I think that's maybe for other people to express a view on rather than me.
Okay. Any further questions, Councillor Wallace?
Yeah, I would really just to say that I'm sure as members of this committee, we have concerns that we're sitting here and, you know, you could have reports going through and people say, oh, well, it went through the audit committee, so everything must be tickety-boo, and that's not, I don't think we can guarantee that. It's just, the concern, as I say, is that these reports come forward, and as I say, today is a perfect example. Have we missed something? Is there something that we should have been able to pick up on that we maybe haven't? And then when further down the line something serious comes as a result of that, perhaps lack of scrutiny. It's not lack of scrutiny through lack of effort, it's just the resource that we have available to do what we would like to do. So I'm just throwing that into the mix and just to see how members feel about that, and whether or not that's maybe a question we want to put in our self-evaluation as to how comfortable we feel about the resource and whether we feel that we are confident that we are doing what we're here to do. Thanks.
Thank you. Any other comments on that at all? Elected members? Councillor, do you want to?
No, I was just going to say that makes sense. Councillor Wallace, if there is another self-assessment coming up, it's something that could be discussed. And
yeah, okay. If there are no other questions, comments, are we happy to accept the recommendations? Yes. Okay, thank you. That brings us to the end of today's agenda. Thank you for your attendance.